company to update them for a redesigned vehicle. It's not unusual for some pause in production for such a transition for any automaker, even very experienced ones. And Tesla did flag that they would lose weeks of production in the first quarter of this year. That is a huge factor here in the first couple months. I do think that a big question that investors have is just how much is this also in any way tied with Musk's becoming even more of a lightning rod with what he's been doing in Washington and the way he sort of inserted himself also in politics over here in Europe.
Given the politics, you've seen a rise of vandalism when it comes to Tesla vehicles. And what do we know about the expectations for Model Y or otherwise in terms of turning around this slump? Are people, do we know, holding off on buying Teslas now in fear of them being vandalized?
I think the Model Y, of course, is their top-selling vehicle. It's one of the best-selling vehicles in the world, regardless of powertrain, electric or otherwise. This is a vehicle that debuted in 2020, was in need of some sprucing up. Tesla has done that. I think they've made some improvements to this vehicle that may lead some consumers to give it a sort of fresh look. I think the question is when your vehicle is as politicized as you can't really think of another sort of car or truck that is so synonymous with a particular person quite like a Tesla and Elon Musk. And do consumers want to have that tie? There's absolutely a population of people out there who are still big fans of Musk, but they're also he's an extremely polarizing figure.
Craig, we thank you so much for your analysis. Of course, that is Bloomberg's Craig Trudell. And as we've been saying, Tesla shares are higher today, but they are still down more than 30% year to date. That is despite retail investors pumping billions into the stock in recent weeks. Bloomberg's Bailey Lipschultz covers markets for us. Emily Graffeo made this great point to us last week about how you look at the ETFs tied to Tesla, and it's uncertain whether that is being used to fuel short interest or whether it's real buying.
Well, when I talk to retail traders who are still buying this dip, and in 30% it's no longer a dip, I'd call that a pretty sharp sell-off, they're just believing that the long-term game for Tesla will work out. They're not necessarily betting on the robo-taxi or the humanoid robot. They're just simply saying, I bought Tesla a number of years ago. I'm up over 1,000%. Inevitably, this is going to go back up regardless of what we've been seeing from fundamentals. As you can see, it's up 1.5% today, but you're still dealing with choppy underlying fundamentals in terms of sales, not only here, but especially in Europe.
How's the short interest look? It goes to Bloomberg and
2.5%, I think. I don't know, which feels, this has always been a battlefield stock. And when you look at it, this is a company that, as you mentioned, fits into a number of ETFs. You have levered ETFs to the long and the short side. You have kind of a stock that for a while before it was added into the S&P 500 was really used by money managers to generate alpha. So you're looking at a battleground stock, a company that's worth, call it $900 billion. So whether you're long or short the company, pretty much everyone in America is exposed to Tesla because of its stake and positioning in the S&P 500 and the NASDAQ 100.
Bailey, thank you so very much. Matt, I'm looking at the ANR function. What's interesting is the price target has gone down for Tesla, but the buys have actually increased into March. So certainly people looking at the dip. And that brings us to the outlook, because Kathy Wood from ARK Invest is still bullish on Tesla, very bullish. Here's what she told Bloomberg TV earlier today.
We think that robo-taxis will account for 90% of the value of the company in 5 years. And we're on record saying we believe in 5 years, the stock will hit $2,600.
Let's discuss the outlook with Bloomberg intelligence analyst Steve Mann. And, Steve, Kathy Wood, famous for these far-out targets. I'm pretty sure she had previously said 3,000, so 2,600 isn't too much from her. But right. Is this the kind of enthusiasm that you're seeing among investors?
Yeah, I am. I think, we're not allowed to call stock prices, but I think if you look at the business fundamentals, I think this is the bottom. We are expecting, second quarter to be an inflection point for their sales, not just in Europe, but globally. Craig earlier talked about the changeover in Model Y. Personal experience working at GM, this is very common. right? And even in the second quarter, we may even see, April sales being a little bit weak because of the ramp up. But, if we're talking auto sales here today, I think auto sales have bottomed. But then if you look a little bit farther off, AI is a great story for Tesla.
Steve, what are the catalysts here? Because there are different things that different folks on the street are pointing out. For example, rollout of autonomous vehicles in Texas, for example. There's this Model Y revamp. What do you think it is that's going to move the needle?
I really think the Model Y changeover, and then next they are going to launch a cheaper model out in the middle of this year. There's a debate if it's another variant of a Model Y or a totally new vehicle. But in any case, I think a lower price model will work because, Tesla really needs to diversify its geographic sales beyond the three biggest markets. There's South Korea, there's Southeast Asia, huge market. India is a huge market for Tesla. And, Model Y 3 is not going to do it. A cheaper 30,000, maybe sub 30,000 vehicle will work in those markets. And so it's really bright if they can launch those vehicles.
Steve, thanks so much for joining us. Bloomberg intelligence analyst Steve Mann. Let's get a check right now on what futures look like. Just 22 minutes to the open. You can see S&P futures continue to climb. So now up about 1/4%. NASDAQ 100 futures also gaining 1/4% with the small caps down, Shonali.
Yeah, we're looking at some individual movers to watch, and some of these movers do say something about the broader economy. We're looking at KB Homes. It cut its forecast after disappointing results came out from the home builder. It's now down almost 8%. People are looking at the home builder industry very closely at this juncture. Of course, rates, consumer sentiment. There's a lot to dig into there, but also on the consumer mat, McCormick. They did reaffirm their outlook, but that means sales growth will be under 2%, and McCormick is also down more than 5%.
Oklo is also down more than 5% as its earnings results came in below expectations. We'll discuss that with the CEO in the next hour of Open Interest. Coming up, President Trump dangles breaks for many countries from his upcoming tariff regime. More on trade next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the big biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get out of high interest to look at what's making headlines around the world. UBS Investment Bank says the visibly tiring U.S. consumer will drive a further 8% slump in the S&P 500. The strategist Banu Boyeja saying that numerous indicators are flashing warning signs, and he expects the S&P 500 to drop as low as 5,300 points as analysts cut profit estimates, I should say, for the next 3 to 4 months. Big tech companies and some foreign countries are pushing the Trump administration to rethink a Biden-era semiconductor strategy as the U.S. prepares a framework for controlling artificial intelligence development around the world. The so-called AI diffusion rule, which restricts the number of AI processors that can be exported, prompted an outcry from tech giants like NVIDIA after Biden officials unveiled it during their last week in office. President Trump says he will announce tariffs in a separate story on auto imports in the coming days, and indicated some nations will receive breaks from next week's so-called reciprocal tariffs. He also repeated his threat to impose duties on pharmaceutical drugs in the very near future and said he planned to proceed with sector-specific tariffs on lumber and semiconductors down the road. Trump said his tariff rollout next Wednesday will focus on reciprocal duties, featuring rates on a country-by-country basis corresponding to tariffs and other trade barriers on U.S. products.
Well, I may give a lot of countries breaks, but it's reciprocal, but we might be even nicer than that. We may take less than what they're charging because they've charged us so much. I don't think they could take it. In other words, they've charged us so much that I'm embarrassed to charge them what they've charged us.
Of course, there's a lot to digest, so we're going to stay in Washington. Joining us for more details, Bloomberg's Tyler Kendall reporting from the White House. There are the so-called reciprocal tariffs, there's what he calls secondary tariffs, and then there's autos and potentially pharmaceuticals. What do investors need to know, and what's the timeline?
Yeah, hey, Shanali. So at the moment, the timeline is fluid when it comes to those sector-specific tariffs, but President Trump appearing to confirm the Bloomberg News reporting that they will not come on April 2nd. He did say when he was outlining them that auto tariffs could be coming in the next few days, pharmaceutical tariffs could be coming in the very near future, and chips and lumber tariffs could be coming down the road. So that's sort of the timeline, if I can call it, that he outlined, but at the moment, auto tariffs appear to be next on deck. Then he said that some countries could be excluded come April 2nd. We know countries that have no tariff barriers, low tariff barriers, or run a trade surplus with the U.S. would be prime contenders for that. But that also, our reporting indicates President Trump is taking into account how cooperative or combative countries have been in negotiations. I'll point you to one happening today. The EU trade chief is here in Washington, set to meet with Commerce Secretary Howard Lutnick and also USTR Jamieson Greer. We know something this White House would like to see is a lowering in tariffs when it comes to U.S. auto imports into the EU. But important to keep in mind, Shanali, these negotiations also about those non-tariff barriers like value-added tax and the digital services tax, too.
Got to ask you, Tyler, about the big tech companies and foreign countries that are lobbying for a change to the chip export rules. Is the Trump administration listening?
Well, this Trump administration has a particularly interesting relationship when it comes to the chip industry. Take, for example, that President Trump would like to revoke funding under the Chips and Science Act, taking more of a stick versus carrot approach when it comes to them trying to get more investment in the U.S. Now, this administration is keenly listening when it comes to chip companies trying to promise that they will move investment into America. Of course, that goes hand in hand with these conversations that we're having about tariffs, and that could be one potential sticking point as they look forward on this.
Tyler, thank you so very much for all of your reporting. That is our own Tyler Kendall reporting live from the White House. Now let's look under the hood. Let's get an impact on stocks as investors are digesting the latest tariff threats. We're going to bring in Bloomberg's Isabel Lee to follow the moves.
Hey, Chanel, so it's a new set of comments that really highlights the erratic approach administration is taking, and it's frazzling investors. So let's go through it sector by sector. We have autos, we have GM, Ford, and Tesla. Stocks there pre-market are edging mixed. We have President Trump saying he will announce tariffs on automobile imports in the coming days. And lots of these automobile companies have really been struggling to come up with a game plan. Some of them have been shipping engines before the levies are enacted. Some are canceling orders. Any relief would really give them more latitude to adjust. These automakers have aggressively sought to halt or revise revise any of these tariffs because of concerns over potentially catastrophic effects. And up next, let's look at pharma. We have Pfizer, Eli Lilly, and Merck. You see shares are also a little mixed. Trump on Monday repeated his threat to impose duties on pharmaceutical drugs. He said they would come in the very near future. Now they're all green on the screen. Pharma giants in general have continued to ship profits offshore, and this is despite criticism. So often in countries with favorable tax treatment. So Trump's administration could take measures when it comes to profit sharing, including tariffs, limiting federal funding for research and development, and introducing penalties. And last, I think it's a favorite of many, is chips. So we have NVIDIA, Broadcom, and Intel. Stocks are edging lower there. Trump said he plans to proceed with sector-specific tariffs down the road without elaborating. But at one point, Trump said it'll be as high as 25%. And I mean, normal Americans don't really buy chips, but they're in basically everything we own. Laptops, Wi-Fi routers, even cars have thousands of chips. So I think that will really increase the price of electronic chips there.
Yeah, motorcycles as well. My Ducati has hundreds of chips in it. So I think it's interesting to see, I'm looking specifically at the cars, right? Ford is actually up year to date, total return of almost 7%. And then you've got the rest of the sort of American-owned automakers down, right? GM is down 3% in terms of total returns. Stellantis is down almost 6%, but Tesla is down, as you mentioned at the top, more than 30%.
Yeah, and there's so many factors for that too. I think this is interesting in the auto industry as well. Another kind of news headline here for you: Hyundai surging because the automaker from South Korea is looking to make a $21 billion investment in the United States to avoid some of these tariff threats. So is it working? I don't know, Matt.
All right, let's get a check on futures. Just about 12 minutes to go until the opening bell, and we still see gains on S&P futures, 0.3%. So really at the session highs right now after the gains that we saw in the market yesterday. The NASDAQ 100 futures are also gaining this morning. We had 2% gains there yesterday, and we're adding to those today. Less than 12 minutes to go, as I said, now 11 minutes to go to the opening bell. We'll discuss the shifting outlook from strategists next with Seema Shah of Principal Asset Management. This is Open Interest.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
division is emerging on Wall Street. On one side, strategists at Morgan Stanley, JP Morgan, and Evercore all starting to see signs of a bottom in this market. While on the other, UBS Investment Bank sounds the alarm, predicting a further 8% decline in the S&P 500, and HSBC's Max Kettner double downgrades, I should say, U.S. stocks to an underweight, citing risks to economic growth and numerous sources of uncertainty. Let's ask Principal Asset Management Chief Global Strategist Seema Shah to weigh in. She joins us now on Open Interest. So, Seema, I wonder if this divergence is split. European investment banks seem to have a real problem with the S&P and think it's going to fall further. U.S. investment banks are a little bit more constructive on stocks here. What's your view?
Hi, Matt. We are a little bit more constructive. I wouldn't say considerably so, though. When we're looking at the global outlook, the U.S. outlook, the thing that we know is that there is a ton of uncertainty out there. So do you want to be increasing your exposure, underweighting your exposure when you don't know what the next day is going to bring in terms of tariff announcements? Now, generally speaking, though, if we're looking out over the whole year, we're not expecting recession. We are expecting a slowdown in U.S. growth, but we're also assuming that there's going to be a number of more growth positive factors being introduced in the coming months, which would be, a good offset to some of the downward impacts that we're seeing. But there's a lot of assumptions built in. So I think for an investor looking forward, having that lack of clarity from the policymakers is one of the reasons why just kind of sitting at neutral is potentially the safest place to be at the moment.
I want to double down here on that HSBC call because Max Kettner had been writing that uncertainty around this April 2nd deadline may also be very high. But what matters most is the probability of these unusually high levels of uncertainty disappearing entirely beyond that April 2nd date. That probability seems pretty low in our view. UBS saying the same. April 2nd used to be this date where people expected that the tide would start to calm, but that seems like it's going away. It seems like people expect that this could be very volatile even past April.
I would agree with that. I'm not expecting that to be the clearing event. It will be good to have some idea of what are the tariffs, particularly for Europe, what they're going to be. But ultimately, I think we've seen from the Trump administration that one announcement doesn't necessarily give you the certainty that investors are looking for. So actually, we are expecting certainty to be cleared up as we get to the second half of the year. But April the 2nd still seems fairly early. So I do think uncertainty is going to linger. But just it's worth remembering that, there's never been a U.S. recession in history which has been triggered by just a lack of certainty. So you need to see some fundamental moves going on in order to really downgrade the prospects very meaningfully.
Well, the consumer weakness seems to be the real problem here, Seema. Are you concerned about the soft data getting hard?
Well, look, like you said, the softening in the data, we've got the consumer confidence survey coming out in a bit. These are all really important. But again, when you're looking at the soft data and the hard data, there isn't always a clear correlation where softening in some of the consumer expectation surveys start to actually translate to a weakness in the consumer spending moves. Now, we are expecting a softening, but in terms of the depth to which some of the confidence indicators have moved, I don't necessarily think you're going to see that being followed through in the actual hard data. The other thing, though, and again, we're kind of putting a lot of different variations on this, is that when we're thinking about the consumer confidence data and the various hard data that is out there, would it really be feeding through right now? Would we really be seeing weakness today? So we are almost putting aside some of the numbers that we're seeing from retail sales, industrial production, et cetera, and saying that, look, it could be another month before we start to see the real impact coming through to the U.S. economy. So again, uncertainty in every single which way you look, but equally when you have uncertainty.
All right, Seema, we're gonna keep you with us here. We're gonna come back to you. We're looking at futures that are up ahead of the opening bell. This is Open Interest.
first time, or got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi. Right. And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley, in LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
Has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are rising today, even after the massive rally that we saw yesterday. The S&P was up almost 2%. It was the biggest gap higher on a Monday, according to Bespoke Investment Group, since 2022. And we're building on it now. Not huge gains, but you can see futures are up about 0.2% on the broader index. You hear the opening bell. If you look down on the New York Stock Exchange, Top Ships is ringing that bell. I'm not sure how reliable the chart is, but it looks like their stock is down 98% in the last 5 years. On the other hand, Cognizant ringing the bell, the NASDAQ market site. Over the last 5 years, they've done relatively well, returning in terms of total return about 76%, which is better than a stick in the eye, but not as good as if you had just bought the NASDAQ itself. A check on the live averages as they start to trade now. Just a few seconds into the trade, and we're seeing pretty much what we saw on futures, an outperformance of the S&P 500, adding almost 0.2%. The NASDAQ 100 adding about 0.1%, but really building on the 2% plus gains that we saw yesterday. The small caps right now, little change to down with a red arrow. In terms of the stocks that we're watching, Tesla was absolutely ripping face yesterday in the face of BYD outpacing it on sales. Today we have more bad news on Tesla, and the stock is up again. All right, it's only up 0.5%, but this after sales in Europe dropped 40% in the last month, and they dropped 10 months out of the last 12. Kathy Wood still bullish on the stock, saying she thinks it's worth $2,600 by 2030. Shonali, that's a little bit lower than her previous target of $3,000.
Still a long way from 280. But to your point, dip buyers are coming back in. I'm looking at a different sector, of course, highly watched. Remember, tech execs are pushing the White House to roll back curbs on semiconductor chips. And this comes as the chairman of Alibaba said he's seeing the beginning of a bubble for AI data centers. He claims that data center investment announcements in the U.S. are duplicative. You are seeing NVIDIA down 0.5% today. And Matt, as we know, this has been a massive gold rush on Wall Street. The question is, has too much money poured in too fast? We'll see.
Duplicative is an awesome word. Duplicative. I'm going to start saying that more often. We are back right now with Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, what do you think of mega cap tech? Obviously, that was the wind that filled our sails the last couple of years. It's been more of an air brake this year, but is this a cheap entry point?
So look, it depends what your time horizon is. In the near term, we are seeing that the earnings numbers are trending downwards. Some optimism today, but generally speaking, people are worried that the lofty earnings expectations cannot be met. Now, if you're looking out over 5-10 year horizon, however, we're still very much of the mindset that technology will continue to be at the cusp of all of the productivity growth and future innovation. So we still are maintaining a strategic overweight, but certainly in the near term, we have got some concerns that you could see some further weakness for the Max 7.
You know, a little bit earlier, Seema, we were talking about how there has been a division on Wall Street on how much upside or downside there is from here. But one part of that thesis, I want to pull out what has been said by UBS on this in particular, because the consumer story seems to be of critical concern. When it comes to UBS, they say the U.S. consumer is tiring, and almost no hard data point was inflected infected positively, with the exception of U.S. durable goods. But what has happened since is the soft data has flattered to deceive. It's gone up and gone straight down. That is UBS Chief Strategist Banu Baweja. Do you agree? How much of a risk is the consumer, the U.S. consumer, at this juncture?
Well, you're certainly seeing strains build up. We had been seeing strains even before the beginning of this year in some of the lower-income households, and now you are seeing some of it creep through to the medium income. I think the high-income households are still holding pretty firm. They have such a significant savings buffer built up over the last couple of years, given their exposure to equity markets and to real estate, so we're not too concerned about them. But certainly from our economic forecast, we are expecting there to be a slowdown in consumer spending over the next 4 quarters. But again, it's not moving into negative territory. So it's a slowdown rather than a kind of an all-out concern where it could really drive the U.S. into recession.
Well, first of all, I want to shout out Levin Stamm and Alice Gledhill, who wrote that story on UBS, and thank them for their work. And then kind of take a turn here, Seema, with you to the positive. The Trump administration wants to reduce regulations. The Trump administration wants to cut taxes, and that fairly soon. Is that going to boost the animal spirits for this market?
Yeah, so within our assumptions where we see that the U.S. economy slows but it skirts recession, we're assuming that in the second half of the year, you do start to see some of these more growth-friendly initiatives coming in. Specifically, deregulation is a key one. We know that business sentiment, business optimism was really, really boosted by the idea that the Trump administration would start its term with deregulation. Now that's fallen back to the background, but we do think it's going to come in the second half of the year. And importantly, when we're thinking about the US versus Europe, that question continues. The takeaway I'm still getting from European investors is that when you're comparing the two, actually the fact that Europe is not deregulating is one of the key reasons why they still believe in US exceptionalism. So that is a core part of the story, and it is one of the reasons why we're expecting the US to just slow down and not see recession in 2025.
You know, Seema, there are a lot of investors who are out there looking at the macro signals, but there's another group of investors who are looking at either technicals or just the direction of the trade. You look at a day like today, yes, the S&P 500 is up, but the sectors leading that are fairly defensive. It's energy up 1%, it's financial services leading the way, materials. Is this still a defensive trade? This doesn't scream confidence yet when it looks like the dip buyers that are coming in are still looking for safety.
Absolutely. We're still on the defensive mindset. We're still thinking about which are the companies you want to have exposure to in this environment. It's still the ones with the balance sheet power. It's still one of the ones with have got strong margins and cash flow. That is still a very defensive mindset. Now, within some specifics, we think that financials, because they're less vulnerable to tariffs, and because we think that some of the concerns around the US economy have gone too far, they do stand to do a little bit better. But overall, this is more of a defensive posturing that we're seeing across the whole asset allocation positioning, even within fixed income, really starting to think about high quality. So certainly that's the direction of travel for us.
What do you think about the rotation that we've seen, especially into European defense stocks? Is that sort of optimism for more spending out of Germany and its EU counterparts going to come to fruition?
Yeah, I think it is going to come to fruition. I think the bigger question is how it starts to feed through to the broader European economy. Now, we know that defense stocks, any spending on defense doesn't typically have a high multiplier, but the absolute number that we're looking at is so huge that there will be some positive effects feeding through to Germany and then also to Europe. But at the same time, that doesn't really feed through to growth numbers until 2026. So there could be a bit of a window where you see a pullback, where you don't see the economic numbers maybe turning up as some investors were hoping for in the near term. But certainly if you're looking out of a 2026, 2027 horizon, these are better growth numbers feeding through from defense through to infrastructure and then to the broader economy.
Seema, wonderful to have you today. That is Principal Asset Management Seema Shah. And coming up, KB home sales missing sales goal for the first quarter and cutting guidance as consumers pull back on home buying. We're going to talk about what this means about the U.S. consumer. Stick with us. This is Bloomberg Open Interest.
In case you missed it, on Bloomberg Crypto.
You have sell-side analysts taking a look at what you're doing and starting to compare you to Coinbase. Are you after their business?
Well, I think we compete in the general sense of offering crypto to customers, but also this is a nascent industry and not very many companies have entered yet. Even though Bitcoin has now been around for 15 years, institutions and other companies have been waiting for signals to enter the market.
There are a lot of financial firms that are looking to tokenize private funds also.
Yeah.
Are you in talks with any of them?
We're generally in conversations with anyone trying to do interesting things in the space. If I had to pick the biggest pain point, AI is like transforming everything. So I think it's tough right now if you want to be in the AI sector as a retail investor. There's relatively few options that you can actually invest in.
Don't miss Bloomberg Crypto live Tuesdays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Open Interest. Let's get a check on what stocks are doing 11 minutes into the session. We're still looking at gains, not terribly strong. The S&P 500 yesterday closed up 1.76%. It was the biggest gap up on a Monday since 2022. So 57.60 is where we pretty much finished the day. We're at 57.73 right now. The NASDAQ gaining about 0.2%, also ripping higher yesterday. Now trading well over the NASDAQ 100, well over 20,000 at 20,218, and the small caps lagging a little bit today. But basically some solid gains that look to be stable, at least in the first few minutes of trade. Shanali, let's get to some of the top calls for the day.
Yeah, absolutely. Some of the analyst action in focus this morning. First up, we're looking at Carvana getting upgraded to a buy at Morgan Stanley. The firm says the pullback in shares creates an attractive entry point for the stock, and you are seeing it up now 2.6%, losing some of its gains, but still up. Next up, Bank of America double upgrading Cloudflare to a buy from a sell, citing improving fundamentals. Bank of America says the software company is set to be an AI winner. It is now up 5.8%. And finally, Ally Financial getting downgraded by BTIG to a sell. The firm cites heightened competition among the banks for auto loans and macroeconomic headwinds. A lot of people have been watching the stock closely for health of the consumer, Matt. It is down only about 0.4% right now.
All right, let's turn back to some earnings news. Out of the home builders, KB Home reporting disappointing Q1 results, slashing its annual forecast. The CEO highlighting a challenging environment, saying, quote, consumers are working through affordability concerns and uncertainties related to macroeconomic and geopolitical issues. Oh, and don't forget, those rates are still very high on mortgages. Drew Redding of Bloomberg Intelligence joins us now with more. So, Drew, the outlook, I guess, the problem for these home builders really across the board is just affordability. There's not a lot of inventory out there, right?
Yeah, so affordability has been the big challenge for a couple of years now. You have home prices up more than 50% since pre-pandemic levels. Mortgage rates still in the high 6%. So that's the number one challenge out there. But what we've increasingly heard from the builders is the psychological impact of making a home purchasing decision is becoming more of a component of why sales are stalling. You have consumers out there who are more concerned about the economy, perhaps more concerned about the prospects of losing a job. So I think with all that uncertainty, that's also holding back the market. Now, you mentioned a lack of inventory. That's certainly been one of the big sprees for the builders over the last couple of years. Limited for sale inventory in the resale market has funneled demand towards the builders. But we're starting to see that in some of the key markets like Florida and Texas, that resale supply is really starting to build, and that's putting some price pressure on the group.
Drew, I look at, I always default to the comp function on the Bloomberg terminal, right? It shows you a 5-year picture of the stock price, and I put KB Home up there against D.R. Horton, Lennar, and then Toll Brothers, which I guess makes maybe more luxury product. You're the expert here, but is that sector, the higher end home builder, are they doing better than the rest of the group just because that sector of consumers is doing better?
Yeah, that's a great question. And that's really what we've seen over the past year or so is that builders with exposure to the move up and luxury segments are doing a little bit better. There's more traffic in those markets. Toll Brothers is obviously the name that comes to mind. They're kind of in a unique spot within the public home building realm. On the other hand, you have the entry-level builders, which are seeing more of a hard time, which you would expect because those buyers are more sensitive to that monthly payment. And when you have rates, as high as they are, and there's a lot of volatility in monthly payments, you're going to see those consumers start to pull back more, and that's what's happening out there.
So, Drew, in aggregate, is the direction of travel worse or better? Because a lot of people were thinking one of two things would happen. Either eventually mortgage rates fall, you see a set of buying, unclear whether the prices in aggregate go up or down once you see more buying, or you have an overhang and you don't have rates come down and you're kind of stuck in the water. Where is your base case for where things go from here?
Yeah, it's a good question. So we're in the heart of the spring selling season, and you would have thought with mortgage rates coming down about 50 basis points since the start of the year, we would have seen more demand, and that's just not materializing yet at this point. And I mentioned, I think a lot of it has to do with the uncertainty that's out there with the broader economy, the employment situation. As it relates to the new home market and the builders, they also have the overhang of higher costs related from tariffs, the potential threat, from immigration policies, which could impact labor. So there's a lot of headwinds out there for the group right now.
All right, Drew, great to have you on the program. Thanks so much for joining us. Drew Redding covers the housing space for us out of Bloomberg Intelligence. At the top of the next hour, we're going to get new home sales, by the way, and the latest consumer confidence numbers from the Conference Board. Definitely some data you don't want to miss, and we'll bring it to you live as it breaks. Coming up, not guilty? The Journal reports that Boeing is in negotiations with the DOJ to withdraw its own guilty plea. That's because it thinks maybe this administration will be a little bit more lenient than the last. That's next. This is Open Interest.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
This is Bloomberg Open Interest. Quick check on what's going on in stocks right now. We have, or we had, I should say, a follow-on rally from the big gains that we saw yesterday at the close. You can see now the live cash trade has turned lower, although not by much. The S&P 500 down 2/100ths of 1%. The NASDAQ 100 down 4/100%. Nonetheless, a reversal here, and maybe this due to some of the confusion we've got on the trade timeline. Small caps are down, and the VIX actually is down a little bit as well. In terms of the individual stocks that are moving, here's the reason for the drag. NVIDIA is now down 2%. That big heavyweight pulls on the S&P because it's worth so much. Tesla is now lower by 2.2%. Remember, at the open, it was gaining by about 2/3 of 1%. We still have green arrows on the biggest of them all. Apple rising, but only 0.4 of 1%. Google is also up 0.5%. And then, as Shanali points out, we have some runaway gainers in tech. CrowdStrike Holding, the cybersecurity company, up 4.6%, and Mobileye up more than 5% as well. So a bit of a mixed market, Shanali, but overall, the index level, we're looking at red now.
Yeah, we are looking at a live trade. Some of the ones that were gaining this morning now turning around. We'll talk more about it in a second, but I'm going to switch gears because there's another story that caught my eye, and it's that Boeing has changed its mind. The Wall Street Journal reporting that the plane maker wants to withdraw a deal with U.S. prosecutors to plead guilty to misleading regulators prior to 2 deadly crashes of its 737 MAX aircraft. We're now going to bring in Bloomberg's global aviation editor, Benedict Kamel, who joins us for more. What's the timeline here and the prospects for them to revise their deal?
So at this point, it looks a little bit like a test balloon. We don't know for sure whether this is something that Boeing is in fact considering. As you said, the Wall Street Journal reporting last night that this is something they are looking at. It's a really complicated back and forth. It's been going on, as you said, for years, stretching all the way back to those 2 crashes, one in late 2018, one in 2019. And as a result of that, Boeing was accused of misleading regulators, essentially, and was put in a penalty box for 3 years and said, okay, you can't do anything wrong for the next 3 years. You're on probation. And then something did go wrong last year with that panel blowing out. So the whole thing sort of blew up again. And in the end, Boeing agreed to agreed to plead guilty. And that also blew up in the end because the judge didn't like some of the elements. And now we're back and forth again. So we will probably get a new accord in sometime in April 11th. But, you know, there's been so much back and forth, it's hard to say. But Boeing is probably thinking they might be able to get a better deal out of this new administration, which might be a little less heavy-handed on corporates. So that's what they're at least considering, according to the Journal.
Also, this administration is very transactional, right? You do something for me, I do something for you. That's the art of the deal. How is Boeing's relationship, how is CEO Kelly Ortberg's relationship with President Trump, given Trump's concerns about Air Force One and the price and delivery of that aircraft, and Trump's best friend Elon Musk has kind of a rivalry with Boeing in terms of SpaceX, but they seem to be working together fairly well.
Yeah, I mean, you're right, Matt. It's a very complicated relationship and very hot and cold. Trump obviously very unhappy about the delays on the Air Force One plane that's being built by Boeing. But then only a couple of days ago, Boeing was awarded this really important new fighter jet deal, the F-47, as it's subtly called. So obviously back in the good books. And as you said, this is an administration that is transactional, that is probably very protective of its national champions. We've heard Trump speak very favorably of Tesla. He has probably an eye towards Boeing. He wants to protect that company. It's part of a global duopoly. He wants to make sure that they aren't damaged more than they have to be. So this is a gamble on both sides. They might, in the end, just sort of shave away some of the elements of the plea. Whether they throw it out entirely, that would sort of be the nuclear option. That's hard to say. But they might ask the judge, look, there's a couple of things in there that we don't like, that we think you can change. So that might happen. But the idea of throwing it out is also on the table. So that would be a big move.
All right, Benedict, thanks for keeping an eye on all of it for us. Bloomberg's Benedict Campbell will surely be back when we have more on this case. And Shonali, you're looking at the defensiveness in markets. We're not talking about Boeing and Lockheed Martin in terms of defense stocks, but when you see gains for utilities, when you see gains for consumer staples, then you know that investors are getting defensive. What do you see right now?
It's interesting. You have to look at the different indexes. And the first half hour of the trade every day has been setting up to be extraordinarily interesting.
Wow, that's broken down into 163 groups.
Yeah, that's a lot of them. If you had less of them, you'll see that most of the major sectors are in the red today. Fewer.
And then you can just type SPX L1 index to get fewer groups.
Right, and energy is leading the way to the point of that defensive trade. Now, if you look at the Magnificent Seven, I think this is kind of interesting. You actually now have two stocks lower in the Mag 7. That's Tesla, which has turned around in the course of an hour here, and pretty meaningfully, it's down almost 2% now. NVIDIA is losing off the heels of those Alibaba comments on overbuilding here when it comes to the data center boom. But of course, if you're overbuilding, then the hyperscalers could benefit. It would drive down the cost, wouldn't it?
Yeah.
Meta, Amazon, Alphabet, Apple, all up on the day still. Microsoft too.
And by the way, I think that Alibaba story, which is one we haven't really gone into yet, but we're going to in the 10 o'clock hour, is fascinating. If you have Alibaba concerned about overinvesting, you've got signs out of DeepSeek that maybe people are spending too much. You had signs out of, I think, Xiaomi yesterday that they could spend 20% less on chips. It really calls into question these massive CapEx plans that you have at the hyperscalers in the U.S.
You know, not as obvious here, but also those big companies like Blackstone, Blue Owl, Apollo. This is one of their biggest theses for investing, so it actually spreads into the financial industry too.
Yeah, data centers are a big play, obviously, especially in real estate, and we're going to focus in on that in the next hour. Coming up in the next hour, Al Rabel joins us. Kane Anderson, CEO and founder. We're also going to talk about snacks. Daniel Lubetsky joins us from Kind. And Jacob DeWitt, the CEO of the nuclear company. This is very much related to the data centers and hyperscalers. Oklo joins us after a disappointing earnings report. This is Bloomberg. You're watching Open Interest.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Top Trump administration officials are going before lawmakers on Capitol Hill this hour. They're expected to face tough questions about how the editor of The Atlantic magazine was looped into a group text about top secret plans to attack Houthi rebels in Yemen. Correspondent Charlie D'Agata is at the Pentagon.
Officials tell me the rules are very clear. It is strictly forbidden to share classified information like the type alleged on an unclassified system. But this morning, the White House press secretary is pushing back, saying nothing on that thread was classified and no war plans were discussed.
Just in from the Middle East, an award-winning movie maker's been released by the Israeli military a day after his co-director said he was ambushed and attacked by Israeli settlers in the West Bank. Reporter Linda Gradstein.
Israeli troops arrested Hamdan Bilal, one of the creators of the Oscar-winning documentary No Other Land, after he was reportedly wounded during clashes in the West Bank village of Susia. Israeli police said Palestinians, including Bilal, threw stones back, and he was arrested for stone throwing.
The U.S. and Russia are expected to release a joint statement on this week's talks in Riyadh on a ceasefire in Ukraine. CBS's Ramy Inocencio.
We have gotten a few lines out from the Kremlin spokesperson in Moscow, though, perhaps trying to set some kind of expectation. One line is that the outcomes of the meeting have been sent to their capitals, their respective capitals, and are now, quote unquote, being analyzed. And this is from Dmitry Peskov. He says that they talked about technical talks, about details, and that those definitely won't be made public.
The U.S. held another round of talks with Ukrainian negotiators today. A new report card on the nation's infrastructure gives it a C, and that's an improvement from past grades of C- and D. Transportation correspondent Chris Van Cleve.
Roads, dams, and the aviation system, they were among the worst performers. And this comes as aviation safety will be the focus of a key hearing on Capitol Hill this week.
Big factors for sectors earning low marks: underfunding and lack of resiliency to severe weather conditions. A global first, bird flu, has been detected in sheep, the infected animal in northern England. An ancient hoard's been uncovered in the UK. CBS's Vicky Barker reports from London.
More than 800 items, 2,000 years old, including cauldrons, ceremonial spears, bridles, and iron tires. The first evidence ancient Britons drove four-wheel wagons.
The Dow is down 39 points in early trading. The S&P is up 3. NASDAQ ahead 29. This is CBS News. A serious injury to a star player mars the NCAA women's college basketball tournament.
Last night's win by one of the top seeds in the women's college basketball tournament came at a heavy price.
More great defense from the Trojans, and Watkins goes down hard, and she's grabbing her right knee, quickly grimacing in pain.
The call on ESPN as one of the game's top stars, USC's Juju Watkins, early in a win over Mississippi State, suffered a season-ending knee injury, a torn ACL that will need surgery. USC coach Lindsey Gottlieb says the team rallied for her and rallied for each other to advance to the Sweet 16. Steve Kathan, CBS News.
Ben Affleck's breaking his silence on his split with Jennifer Lopez. The actor and director tells GQ a large part of it was handling celebrity. He says she was more adept and adroit at it, but his temperament is more reserved and private, made it difficult. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Looking at some consumer confidence data coming in a little bit weaker than expected, the weakest in actually 2 years in terms of consumer confidence. We'll check in with Stephanie Gouchard, Senior Economist at the Conference Board on that data. Grace Lee, Senior Portfolio Manager for Columbia Threadneedle, is going to join us here to discuss her outlook for these markets. And we've got kind of mixed tape here this morning. Drew Redding, Bloomberg Intelligence, U.S. home building analyst, to discuss new home sales as well. Nathan Dean, Bloomberg Intelligence, Senior Policy Analyst. He's going to hold our hand yet again on what is happening down in Washington, D.C. with some of the policies that we need to be on guard for. But right now, let's kick things off with Lisa Mateo and a Bloomberg Business Flash.
You got it. And this Bloomberg Business Flash brought to you by IBKR. Will U.S. natural gas production exceed 3.27 billion cubic feet in January 2025? Well, at IBKR forecast trader, the yes recently at 9%. Check the data, spot the trends, and start predicting today. IBKR.com/forecast. We got a pretty quiet feel to the markets after more eco data. First, the March Philadelphia Fed non-manufacturing activity index that fell to the lowest since May of 2020. Then we go to the housing market. FHFA house price index for January rose 0.2% from the previous month, lower than expected. Then you have S&P CoreLogic, Case-Shiller, 20-city composite, that home price index, higher than expected month over month, but lower than expected year over year. And now it's just coming in. New home sales kind of bounced back slightly last month. Home builders benefited from better weather. So contract signings on new single-family homes, they increased 1.8% in February to a 676,000 annualized rate. And also, read on confidence from the Confidence Board. Expectation 94 came in a bit weaker at 92.9. We go to the markets. We have the S&P 500 little changed, up 2 points. The Dow down about 33 points. The NASDAQ up about 16. We have the two-year yield, 4.01%. That's down 1 basis point. And the yield on the 10-year, 4.32%. That is little changed. As far as the Bloomberg Dollar Spot Index, down about 0.1%. Tesla's European sales, they fell 40% in February. That's marking the 10th drop in the past year. Its shares this morning, though, they are down about 1.5%. Let me go to the Wall Street Journal saying Boeing, they want to withdraw its deal with U.S. prosecutors to plead guilty to misleading regulators before 2 deadly 737 MAX crashes. And finally, Shell, expanding LNG sales by 4 to 5% annually until 2030. Its ADRs this morning, they're up about 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, Lisa. Happy Tuesday.
Yeah,
right?
absolutely.
Still Tuesday?
Sure.
Still Tuesday. All right. Alex Steele, Paul Sweeney, Lisa Mateo. Bloomberg Intelligence Radio. All right. Let's get back to those consumer confidence numbers because we continue to see the soft data disappointing, yet we do not see that within the hard data yet. Consumer confidence falling to a 2-year low. For more on this, we are joined by Stephanie Gouchard, Senior Economist at the Conference Board. She joins us. Stephanie, walk us through this 2-year low. What was behind it?
So the index fell 7.2 points to 92.9, and as you said, this was the lowest since August 2021. What's important is that now this was the fourth consecutive decline, and now the index is below that range in which it has been hovering for the past 2 years. So it's clearly a weak reading. What has been driving the decline is especially the expectation component of our index, where we see consumers negative about the future of the labor market, future labor conditions, and importantly, getting more and more worried about future income.
So, Stephanie, it seems like I would think one of the key issues here would be job security, and it seems like the labor market's still pretty strong here. But is this just investors kind of taking in the day-to-day news flow and kind of putting that into a confidence kind of expectation?
No, so for the current situation of the labor market, I mean, consumers agree that the labor market is still relatively strong, but looking into the next 6 months, they are getting worried. They are getting worried about the labor market in general. And what's interesting in our survey is that they're also getting worried about their income, which means that potentially they are getting worried about losing their jobs in the next 6 months.
Interesting that it's the labor part, not the inflation and rising prices part. Where did that play into this?
So we don't ask especially, I mean, in our index, we don't cover inflation directly. However, I mean, we know, and it has been the case for the past 2 years, consumers are not very happy about the level of prices and about the fact that inflation has stopped slowing. So that's key. I mean, this is clearly playing into consumers' mood, but it's not captured fully in our index because we focus on labor market, business condition, and future income.
So I'm looking at the conference board. The expectations number came in at 65.2 versus 74.8 last period. Give us a sense. Is that an order of magnitude? Is that concerning?
It is. I mean, we need to see whether this is getting confirmed next month because, as you know, this index is going up and down on a month-to-month basis. But this is the lowest reading for the past 12 years as far as expectations are concerned.
Oof, all right.
One more question as well. When you do the survey, is there any distinction between those that identify as independents, Democrats, or Republicans, or is it across the board?
So the survey is across the board.
Meaning that the respondents identify across all of those three bases. So is that what you mean?
So so the survey, the consumers we survey are across the board. We have, the different political groups covered. This is a representative sample of the U.S. population.
All right, Stephanie, really appreciate it. Thank you so very much. Stephanie Guichard joining us from the Consumer Conference Board. She is a senior economist over there. After that drops to a 2-year low. But again, we got to wait to see it in the hard data for us to things to then affect sort of the real economy as well as the equity market and bond market, et cetera. All right, let's take a look at some stocks on the move today. We're joined now by Bloomberg's Isabel Lee, Bloomberg Cross Asset Reporter. Isabel, what is on the docket?
Carvana, it's rising 2%. Morgan Stanley raised the stock to overweight, saying that the pullback in the shares created an attractive entry point for the used car retailer. So the stock has slid around 25% from its peak. And of course, all the markets also slid at that time. We have analyst Adam Jones saying that even if Carvana remains more exposed to a lower strata of auto credit, the company has demonstrated execution with profitable growth and addressed leverage concerns. And he also highlights the fourth quarter results. The company posted 4 consecutive quarters of double-digit retail growth. So Carvana is now hovering at around 217. His price target was from 260 to 280. So that's around a 31% increase from the price right now. So lots of good news there for Carvana.
I have some real-time auto experience.
Yeah, you do.
Saturday, I bought a vehicle, leased a vehicle, 3.5 hours start to finish.
Wait, is that
and
long
we
or
had
short?
picked out the car, test drove it within the first 15 minutes. It was
a mess.
Life-sapping experience.
What, do you have a sense of what took so long
Yes. It is all the red tape that I think the lawyers have layered upon the whole process. You think about Amazon and all that, how it's made it less friction.
Yes.
Less friction.
If I can order
I
a
think
car.
the legal cover your, I must have signed my name and initials 1,000 times and then e-signed it 1,000 times on 1,000 different documents.
Which doesn't that make the case for Carvana? Because doesn't Carvana kind of want to be the Amazon for cars?
Exactly. That's what brought it up for me. And I was thinking the whole time saying, why can't we just point and click? I just, you could send a tuition payment of $50,000 to a university with a point and click. But
that's fair, because I was going to ask maybe because it's a big purchase, but you're right, tuition is also expensive.
Please talk about big purchases.
Yeah.
But to that point, I mean, that's Carvana. Like you
Thank
go,
you
you
for
test
letting me
drive
vent.
it.
Yep.
That's your TED Talk.
Thank you for letting me vent.
But you go ahead and you test drive it, and then you get to buy it, and they deliver it. So like that is the Amazon of cars. All right, what else are you looking at?
Cloudflare is also jumping around 4%. So we have Bank of America double upgrading the software company to buy on improving fundamentals. So Bank of America is saying it's set to be, quote, an AI winner. So analyst Madeline Brooks boosts the price target to $160. And that's coming from a previous street low of $60. So that figure again implies around a 30% upside to Monday's close. So Brooks said that Cloudflare's differentiated positioning in AI leaves, quote, high probability that the firm can become a leader in, and this is new for me, AI as a service. So SaaS is what I usually know, but this is, how do you say this? AI SaaS. And also gaining
AI SaaS. That's exactly right.
Good.
Yes.
And also gaining stronger foothold in network security. She says that that's great. So Cloudflare last month reported their earnings recently, and it jumped in almost a year on sales growth. So it's looking to be a good time for Cloudflare.
What else are you looking at?
Lastly is something I'm excited to talk about, Trump Media. So shares are edging 8% today, but it's down 33% year to date. So this isn't really new, but the news thing is that the company announced plans to work with Crypto.com. So this is a Singaporean-based company locked in a legal battle with U.S. regulators last year. So Trump's company, which owns Truth Social, said it will sell ETFs tied to digital assets and other investments. So that includes a Made in America ETF, a Made in America SMA, energy independence, and Bitcoin Plus, of course, Bitcoin. So products will be made available this year in US, Europe, and Asia, pending regulatory approval. It's just interesting because in the first 100 days of Trump, I mean, he has abandoned the SEC at least. But that's his SEC now, has abandoned and paused many of the high-profile legal cases like Coinbase and Binance. It's just really proving to be a different era for cryptocurrencies.
No doubt. Different era for sure. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. Thank you so much. Bloomberg's Isabel Lee, Bloomberg Cross Asset Reporter. So there's not like a direct line here, but it's a story that I love, and it's reading high on the terminal that Canadians are signing up for 1,461 pack of beer to endure Trump's term. Apparently, Moosehead Breweries has launched a specialty product called the Presidential Pack with almost 1,500 beer cans, one for each day of his presidency, and apparently there's high demand for that.
Okay, I mean, we ask all our Canadian guests here, what's the the feeling on the street?
Mad,
upset,
really
big
mad.
time.
So mad that they're going to drink one beer at least every single day. My thing is like, okay, you don't have to put them all in the fridge yet.
No.
But like, I don't have that kind of space. Like, unless I put it in my bathtub.
Well, you live in Brooklyn, but these in Canada, think about like wide open spaces.
You just put it right outside. It's cold enough, so it'll take care of it. You just go out there and get your brewski. Anyway, I feel like that was an important thing to update our audience on.
That's big. I mean, it's kind of what our friends up north are doing. So hopefully we can mend fences, as they say, and.
Or if not, you can shell out, almost $2,500, including shipping.
Really?
For that. Yeah.
Okay.
Yeah. I mean, that's something. Okay. Coming up, Grace Lee will be joining us, Senior Portfolio Manager for Columbia Threadneedle. We'll discuss her outlook on the markets. It feels like we have a little bit of a pause button today, and I'm kind of working towards what that next catalyst is. And then Drew Redding, Bloomberg Intelligence U.S. home building analyst, to discuss new home sales. Also, was it KB Home was pretty disappointing as well. When you get those high mortgage rates, it's hard to pull the trigger. All right, this is Bloomberg Intelligence. Happy Tuesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, stocks pretty much treading water. This is after a weaker than expected reading on consumer confidence, which really didn't help concerns about an economic slowdown. So right now we go to the NASDAQ, up 0.2%, 38 points. We go to the Dow, little changed, up about 12 points in the S&P 500, up 0.1%, or about 10 points. The two-year yield, 4.02%. Down 1 basis point. The yield on the 10-year, 4.32%, and that's down 1 basis point. To commodities, we'll point out COMEX gold, $3,062 an ounce. Over to oil, Brent crude, $73 a barrel. WTI crude, $69 a barrel. The Bloomberg Dollar Spot Index down about 0.1%. Over to Bitcoin, down 0.1% at just over 87,000. We'll stick with crypto, go to Trump Media and Technology, because word is they plan to work with Crypto.com to launch ETFs. That has its shares higher this morning, up nearly 8%. And BlackRock is launching a Bitcoin exchange-traded product in Europe, its first crypto-linked ETP outside of North America. And in other company news, DeepSeek, well, it's released some updates to its B3 model that promises to deliver better programming capabilities. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, Lisa, thank you so much. We appreciate that, Alex Steele. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcasts Live, and that's where you'll find us here. Looks like the markets have kind of stabilized here. We had that peak to trough pullback of about 10%, and we've kind of been bumping along, rallying a little bit, 2 or 3% off of that bottom here. Let's check out where we go from here. Grace Lee, Senior Portfolio Manager, Columbia Threadneedle, up in Boston, joining us via that Zoom thing. So, Grace, again, peak to trough on the S&P 500 just a few days ago. We kind of hit that 10% correction level. We bounced a little bit here. How do you think about the market these days?
Well, I think the market did have a healthy pullback. It was probably necessary after a couple really strong years, and it's probably warranted given all of the uncertainty, particularly with the Trump administration coming in, not even 100 days in, and all of these changes and executive orders and tariff threats, and then pullbacks on tariff threats. So this is all, I think, just part of a healthy digestion process. And I think it also might be heralding, a shift in where investors might be looking for the next opportunities after, a huge run in particularly growth stocks.
Which begs the very unsophisticated question, is it a sell the rally or buy the dip scenario?
Well, I think it might be a little bit more nuanced than that. It might be more of a rotation by the dip in other sectors, in other companies that investors may not have looked at previously. It's not necessarily going back to the same things that have worked in the past. I do think the market deserves to broaden out and is broadening out, and I think you can see that already year to date in the bifurcation between, let's say, value and growth stocks. Value investors like myself actually think things are looking okay and feeling pretty decent in the market. I think my growth peers maybe not so much. But I think that, again, I think investors have maybe lost a little bit of their muscle memory in looking at things that are not growth and momentum in tech. And so I think, aside from selling the rally or rotating into the same old things, it's really, rotating into other things that have not worked as well and are looking extremely inexpensive and actually attractive right now.
Value versus growth. Where do you see the opportunities here? This has been a market that's been driven by tech and the Mag 7 for a long time. How do you see it going forward?
Yeah, I think I think this might be the year for value stocks. It is starting out that way, and I'm pretty optimistic about that. I think that the setup is actually very good for value stocks in that you have had a couple years of very strong growth-driven markets, and I think you're starting to see a little bit more hesitation on even things like the AI trade. And so for investors that want to hedge a little bit, take some chips off the table, not necessarily put it all in European stocks, there's ordinary American stocks. I think people talk about, is American exceptionalism over because of, let's say, DeepSeek?
Yeah.
I would say that, I think if they refocus on the American ordinariness, the core companies that make up the base of the economy, the bread and butter, and this largely pertains to traditional value stocks. And these are the companies that put up reliable singles and doubles. They're usually not going to hit it out of the park, but I think that's the area that again is starting to perk up this year and probably has some runway here.
So that whole idea, Grace, the TINA, there is no alternative. That's why you have to buy U.S. stocks. It feels like TINA doesn't exist anymore, but that doesn't necessarily mean sell U.S. stocks.
Right. It's just looking at, again, the ignored sectors of the market. If you could believe that the energy sector is up, I think, close to 8% year to date, and that's even with knowing that OPEC Plus might have a lot more oil coming on the market. So there's a lot of areas that have been really ignored by a lot of investors who have really crowded into the growth tech space for such a long time. And, and I think it's looking at value stocks as not just a, run for shelter, but also just a good place to find, interesting companies and sectors that are going to work, in a moderating growth economy, which I think is what we're going to be seeing. Not necessarily recession, although if we do go into recession, again, a lot of these value and defensive stocks will work better as well.
Right. All right, Grace, thank you so much. Always appreciate getting a few minutes of your time. Grace Lee, Senior Portfolio Manager at Columbia Threadneedle. We had some home building news out today. New home sales came in kind of just a smidge below expectations, 676,000 versus 680,000. We also had KB Homes report some earnings today that were a little disappointing to the street. The stock is down 5%. Let's check in with Drew Redding. He covers all the home builders for Bloomberg Intelligence. Drew, let's start with the new home sales number, 676,000. It's, again, kind of just a smidge below expectations, but a little better than last month. What's the industry look like? What's the market look like these days?
Yeah, so we're up about 2%, give or take, month over month and year over year. We've kind of been bumping along this mid 600,000 annualized pace since mid 2023. So, demand isn't necessarily bad, but we're not seeing that lift that we had hoped coming into the year. So overall, the start to spring has been very soft, as you would expect. Affordability is still the biggest challenge out there in the market. Home prices are up 50%. Mortgage rates have come down, but they're still in the high 6% range. And what's interesting now that we're starting to hear more and more, and kind of corroborated by some of the data this morning, is that declining consumer confidence is becoming more of an issue for housing. We heard it from a number of builders. We heard it from KB Home last night. And it's, consumers are more concerned about the direction and growth in the economy, perhaps more concerned that their job isn't secure. So I think that caution is also contributing to the softness we're seeing in the market.
So that's so interesting because we talk a lot about the sentiment data and how that has to translate into the hard data. And one thinks about that more in terms of like retail sales or GDP, but your hypothesis from the read-through we're getting from the actual home builders is that that's actually translating into putting the pause button now.
Yeah, I think you have consumers out there who are saying maybe now's not the best time to make such an important and large decision. We've also heard it from the home improvement retailers. So people in the repair and remodeling market are delaying large ticket discretionary projects. A lot of it has to do with the fact that coming into the year, consumers were expecting rates to come down. They come down a little bit since January, like I said, down about 50 basis points, but I don't think we've gotten the relief that they need to see. What's interesting, we heard this from Lennar last week, is that they're having more trouble qualifying buyers. So maybe people have the down payment and they can afford a monthly payment, but their overall debt levels, just because of everything else that they're having to deal with, the cumulative impact of inflation, is getting it a little more challenging for them to qualify.
So we heard from KB Home. They reported today, I see the stock down 5% at the 52-week low. They also, I guess, called out home affordability. What's going on at KB?
Yeah, so sentiment coming into the quarter was already pretty low across the space, and they fell short of those expectations. Orders were down 17%. They had guided to orders being about flat, so a pretty significant miss on the order front. So they also cut their revenue guidance and their margin guidance, and the reason is, and this is something we're seeing across the space, more incentives, but they're doing it on the home price front. So they're reducing base home prices, which has been less common so far in the industry. They've cut prices in about 50% of their markets by an average of $15,000. They said that ranges anywhere from $5,000 to $30,000. And what's interesting is they mentioned that they're having to get more aggressive in markets in Florida, which is something we heard from Lennar as well.
That's really interesting. Also, quite a big number. When you mentioned that the worry about higher rates, right? And everyone was kind of expecting lower rates this year or the end of last year and it didn't materialize. If we just sort of normalize around these levels, what's the lead time until consumers say, "Oh, okay, I can be okay with 7%"?
Yeah, I don't know how comfortable people are going to be with the 7% mortgage rate. I think you need to see maybe something in the low sixes. We've heard in the past that anything with a 5 handle from the builders has done well, but I think maybe the way forward might be, at least for the builders, is on home prices. Prices are, like I said, 50% above pre-pandemic levels, and I think people are just having a lot of problem with that. Maybe there's a little bit of fear of buying at the top of the market that's holding them back. So, again, it goes to not only the confidence issue from the economy, but how confident are they in the sustainability of these elevated home prices. So rates are certainly a big component. As rates come down, you'll see that marginal home buyer come back in, but I don't think that's the only factor that's holding things back.
All right, Drew, thanks so much for joining us. Drew Redding, home building analyst for Bloomberg Intelligence. Joining us from Princeton, New Jersey. I don't know, I live down on the Jersey Shore. The sign goes in the ground and 15 minutes later it's sold. It is still crazy.
Really?
Where I am. So maybe, but he's mentioning some of these hot markets like Florida and Texas, which were so strong for so long following the pandemic, starting to see some pullback there a little bit.
But don't you feel like people who are buying on the Jersey Shore can pay in all cash and be done?
Yeah.
It's a different kind of market.
It
You can make the argument that Florida could be somewhat similar too, but I guess it's where in Florida would be the question. But having to mark down anywhere between $5,000 and $30,000 to make it affordable, that's a sizable chunk.
Yep.
That's a definite profit margin eater for some of these guys.
Yeah, plus these home builders were offering to buy down people's mortgage rates.
Yep.
If the market's at 6.75, maybe we'll give it to you at 5, or something like that.
And we're not even talking yet about labor and lumber and steel and sort of the price increase there. But speaking of,
and the people to build houses.
Exactly. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, will join us next to break through all the political stories of the day and an update on where we are with tariffs. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, after one of the best days of the year, we've got a little bit of movement in stocks. It follows a read on consumer confidence, fell in March at the lowest in 4 years, decreasing 7.2 points to 92.9. So we start with the S&P 500, up about 0.2%, 15 points. The Dow up 0.1%, 70 points, and the Nasdaq up 0.3%, or 70 points. We go to the yield space. The 2-year yield, 4.02%. That's down 1 basis point, and the yield on the 10-year, 4.33%, and that is little change. The Bloomberg Dollar Spot Index down about 0.2%. To earnings we go, and we'll start with KB Home. Its shares are falling, down 3%. The home builder, well, it posted disappointing first quarter results, cut its fiscal 2025 revenue guidance. The company said this year's spring housing market has been slower than usual. Then we go to Smithfield Foods. They posted a profit despite lower sales, but its shares are down this morning, down about 2.5%. And shares of spice maker McCormick, they are off about 1%. Reported fiscal first quarter profit trailed expectations. After the close, we move on to GameStop. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. All right, it's time to catch up with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, and all the political stories of the day. Can't keep track, so I'm going to focus on a news that broke yesterday. Just get your take on kind of what it means for tariffs going forward. And that's that potential 25% tariff on any nation that's going to buy oil from Venezuela. How does something like that work? This throws like a whole new confusing layer on who and what can be tariffed.
Yeah, so there's generally like 5 or 6 ways that tariffs can be put on place. And for the purposes of today's discussion, what you need to know is that most of them require an investigation. You know, President Trump does have the authority to put tariffs on day one, that moment, via the internet, via Emergency Economic Act. But, you know, this case with the Venezuelan oil tariff, I would just say is that this falls more into the former, where there's most likely going to be an investigation. And I think that's what most investors should prepare for on April 2nd, Liberation Day, is that, look, there is something likely coming on April 2nd that's going to take place that moment, that day. President Trump has really, really hyped this up. But I also would just call out that a lot of this just follows that normal pattern of there's going to be an announcement and then there's going to be an investigation, because for a lot of this that could potentially be challenged in the courts, that investigation is crucial to make sure that these tariffs are sticking going forward.
So you're kind of bursting the bubble a little bit there for Liberation Day there, Nathan. So you're not thinking we're going to see a lot of highlights or fireworks?
No, so, you know, Bloomberg News did some great reporting over the weekend where essentially they said that a lot of the broad potential tariffs, think of like just pure reciprocal tariffs, has sort of been dialed back, and they're looking more at sector-specific tariffs. And, you know, the sectors that we're looking at and we're telling our clients right now, automobiles. President Trump has been talking significantly a lot over the last couple of weeks in terms of the lack of American automobiles in Europe and, you know, subsequently, other European, just this U.S., Mexico, Canada relationships in terms of the automobile supply chains, but also pharmaceuticals. So what we think will happen is on April 2nd is you will see some tariffs go in. They may be sector specific. President Trump even just alluded that automobiles could be in the next couple of days. But then you're also going to see large announcements of investigations, potentially on broad tariffs like 15, 20% on a country, but that investigation will just continue to go further down the line and then be subject to additional negotiation.
So here's something I'll give you some insight into an editorial meeting that we're having and discussion that we're having towards booking for television on April 2nd. Be really cool to talk to some companies that like may be in the crosshairs and like, hey, how are you preparing? How are you doing? We have no idea how to book it. Like, we can understand like what sectors might be in the crosshairs, but in reality, and which might be exposed, are they European companies? Are they U.S. companies? Are they Asian companies? Like, how would you go about trying to craft an understanding of like who to talk to on the C-suite lines?
You know, this is one of the biggest most difficult questions. I mean, I have an alert catcher on my terminal that is set up for tariff news, and I'm getting a news article every 6 to 8 minutes, and many of it is contradictory. But I think what the base case scenario here is this idea that President Trump's going to make a statement, and then for many of the options, if you will, the idea is that there's going to be an investigation, there's going to be another kick the can. So I think what I would tell a company to do is, look, prepare for the worst case scenario, meaning that day you're going to have to deal with a 15% tariff. But the more likely scenario is that you're going to see a statement, you're going to see a market reaction, headline risk, and then you're going to get probably about 30 days to figure out, okay, if this tariff actually moves forward, how are we going to react? Or if there's a subsequent decline or a walk back, how are we going to react? The unfortunate thing is that the news cycle is changing by the hour, and there's only one person that ultimately decides how these tariffs are going to go forward, and it's President Trump.
I don't even know how to set up an alert catcher on my Bloomberg.
You don't?
No. So
okay.
Nathan's way ahead of me here.
Offline convo.
Nathan, Congress, I understand they're back in session maybe 3 weeks before their Easter break. God forbid they go too long. Can they get anything done in the next 3 weeks?
No, I don't think so. I mean, what Speaker Johnson has really told his caucus is that they want to figure out and get the ball moving on this $4.6 trillion tax extension bill that is due by the end of the year. And so over the next 3 weeks, what we're telling our clients is expect some headlines to come out, maybe in terms of SALT deduction, maybe in terms of Inflation Reduction Act, and maybe in terms of cutting Medicaid, because that's what the House committees are trying to do, is figure out is how are you going to pay for this $4.6 trillion deal. Now, I don't think they're going to be able to get there because this is extremely complex. Even just a few moments ago, Senator Tommy Tuberville from Alabama said, look, and I'm paraphrasing here, I don't want to cut Medicaid. 3 out of 5 children in my state rely on Medicaid. I don't want to cut it. So if you can't cut Medicaid, then you're going to take a lot of the tax, a lot of the revenue for this tax extension out of that discussion. So I think what they're going to do is you're going to see these headlines, you're going to see additional debates, but I think ultimately the Republicans are going to need a little bit more time to figure out how to pay for this tax bill.
Right, which also then begs the question that if you were looking at, healthcare companies that have exposure to Medicaid, like same question, no idea which ones then are going to get impacted more if you don't know what that policy is going to be. Okay, so with all of that uncertainty, what is certain right now from policy perspective?
Well, deregulation is certainly continuing to take place. I mean, just later this week, we have a Senate Banking Committee hearing with Paul Atkins, former commissioner, to be the chairman of the SEC, and then Jonathan Gold to be the next comptroller of the currency. Scott Bessent, the Secretary of the Treasury, came out just last week and said, look, we're going to take over the financial regulatory process, and we're going to move things in terms of stress testing, maybe changes to the enhanced supplementary leverage ratio. So if you're a bank investor, for a perspective, there's a lot of sentiment about deregulation, and that deregulation is going to come. Now, specifics are going to come a little bit later, but probably within the next year, you're going to be in a much better regulatory environment than you are today. So there's a lot of work that's going on behind the scenes. The problem is that for the biggest two items that the markets care about, which is tariffs and taxes, tariffs, unfortunately for the market, really just relies on one person. And then the tax reform debate, that just takes a lot more time, and you're going to get clarity later this year. I do think Congress is going to be able to do something on taxes, but it's going to be very difficult to come up with the specifics until maybe May or June of this year.
And Nathan, I think kind of in a related story, Boeing seeks to withdraw its 737 MAX guilty plea. That's according to the Wall Street Journal, thinking that maybe the Trump administration might be more lenient. Is that a sense that corporate America, or is that an expectation you think corporate America should have?
We've actually seen this from other companies as well, this idea that, maybe the regulators or the enforcers aren't going to be enough or as tough. Now, I can't speak to the Boeing case because I haven't looked at it, but if you compare it to like what's going on over the Consumer Financial Protection Bureau, when DOJ came in and they essentially gutted the agency, a lot of those banks and a lot of those companies that are operating or under the jurisdiction of the CFPB just said, look, our enforcement risk has just declined dramatically because even though the regulations are still on the books, we would just say that, who's going to enforce us on this? Now, I'm paraphrasing what they would be thinking. But in terms of the courts, I would just say the courts are still the courts. And, the courts didn't change via the election. Now, the courts over the last couple of years have been really gearing away from more towards a pro-business environment. And that could be in their calculations. But I would just say that, the political, apparatus in Washington has certainly changed. And I would anticipate companies to change that as a result of that.
All right, Nathan, thanks a lot. We really appreciate Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joining us on all the things in DC, on all the stuff. All right, coming up, we're going to talk more about the government and then AI chips. So we have AI chip curbs. Foreign leaders are trying to get President Trump to rethink that. We're going to break that down a little bit more with Mandeep Singh, Bloomberg Intelligence, a senior tech industry analyst, joining us for that. Taking a look at the markets, S&P up 3 days in a row. We haven't seen that since the beginning of February. It feels like a thing.
Yeah,
this is Bloomberg.
Listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Boy, I think we've gone several days without really talking technology. That's not like us.
It's been like a full 24 hours, but yeah.
Okay.
Yeah, well, we're counting weekend, it's like 72.
Exactly. Mandeep Singh joins us. He'll fix that right away. He's a senior tech analyst for Bloomberg Intelligence. All right, kind of the news that got our attention a little bit is Bloomberg News reporting tech chiefs, foreign leaders urge President Trump to rethink AI chip curbs. What is the current understanding of how tariffs may impact the global chip market? Boy, because when I think about a global supply chain, chips is certainly right there.
Absolutely. And look, I think the earliest export controls go back to 2022 when the Biden administration imposed controls on NVIDIA kind of shipping their highest end chip to China. So at that time, it was really restricting their interconnect bandwidth because remember, with AI, all these chips are used as a big cluster. So they thought that could prevent, China from using the latest NVIDIA chips. That didn't suffice. So then they added kind of a new form of restriction, and then the diffusion rule came into play, which was almost 168-page rule around like how NVIDIA is supposed to ship their latest and greatest chips to three different sets of allies in terms of, countries that have unrestricted access versus the ones where China could use them as a proxy to get access to the chips. So there were different sort of clauses in terms of restricting the access to those chips. But at this point, given we keep hearing about Chinese LLMs, Ant Group being the latest one, releasing their own LLM at low cost, it just goes to show that even with all the restrictions, it hasn't really impeded their progress in any way. And they're able to, build on whatever they have available.
So to that point, do chip companies then are like, hey, just let us get a piece of the pie that's already going to build no matter what? Or are they really losing revenue from this?
Yeah, so there are two sides to it. One is if you ask an LLM company like OpenAI, Sam Altman has said, had it not been the export controls, they would be more undersupplied. Remember, this market has been undersupplied for a very long time. Everyone wants more GPUs that they don't have access to. If the export controls were not in place, these companies would be even more undersupplied. But the other side is, NVIDIA is saying, I'm losing revenue because I have got 20% revenue exposure to China. It's getting lower and lower to the point that it will be less than 10% now, and I'm losing potential revenue that I could get by selling my chips. So there are both sides to it, but I think the fact that this market is undersupplied means that NVIDIA does have somebody to buy their chips, and they continue to command premium pricing for that.
Do we have any idea where China is in terms of developing their chips, where their technology is?
Yeah, so with the latest Ant Group model release, what they said was they were able to bring down the pre-training cost by 20% by using not just the chips that are available from NVIDIA, but also their homegrown Huawei chips or, AMD chips. So they talked about a heterogeneous compute architecture and using that for pre-training. And look, in the end, everyone is looking to optimize the infrastructure, more so in the case of Chinese LLMs, because they don't have access to the latest NVIDIA chips, which give you more performance per unit of power than any other chip company can provide. So from that perspective, I feel they've done well in terms of using what's available. But clearly, I think the US-based LLM companies have an advantage given they have the best performing chips and they can train their models much better, they can use it for reasoning. So it is an advantage at the end of the day.
That's why I was asking for Ant and DeepSeek, et cetera. Like, are they accurate in the same way that LLM models in the US are accurate?
No,
right,
I think
so
the OpenAI models are way better when it comes to the reasoning capabilities and really the multimodal capabilities that everyone cares about. At the end of the day, the use case for AI is not just a text-based prompt response. It's much more than that. If you're talking about AGI and, everyone feels like we can get to AGI, it's not just text-based. You need audio, you need video, and the Chinese LLMs are still way behind when it comes to the other modalities.
All right, let's be honest. You and Anurag built a career on 7 stocks, basically. Do people still want to talk to you about the Mag 7, or is that just passe?
Absolutely. I mean, you can't really talk about the indices without these Mag 7 stocks. So no matter what happens to the market, these are some of the best companies when it comes to generating free cash flow. And look, they have tremendous moats, so they drive the market.
Do investors feel like that, 15% or so drawdown in the Mag 7s, is that temporary? Are there still... that hasn't knocked anybody's confidence in those names?
Yeah, it's still the prevailing sort of sentiment that, you buy the dips on these companies because they just are fantastic when it comes to generating free cash flow.
Well, what I keep hearing a little bit, though, too, is that where these things are built, like the data centers and how you power them, that's now kind of up for grabs. Like, we know that they're going to work, obviously, in, like, Virginia, but are they really going to work in Texas? And are they really going to work in, like, North Dakota? And they're really going to work with all this energy. So it's like how you get it done feels like a question, but that shouldn't affect the actual CapEx spend or the demand. That's just sort of the back end part. Anyway.
Yeah, that's the first and second derivative play that everyone keeps talking about.
Yeah, and that seems to be where the question marks are. Mandeep, always a pleasure. Mandeep Singh, Bloomberg Intelligence, Senior Tech Industry Analyst. And I should point out that spokespeople for the White House and Commerce Department did not respond to requests for comment on the story of tech chiefs and foreign leaders urging Trump to rethink some AI chip curbs.
Gotcha.
For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great lineup for you. Just want to bring you some breaking news. The U.S. now says that Russia has agreed to ban striking on Ukraine energy assets. We will continue to bring you updates as they cross. We're going to delve deep into oil in just a moment with Vince Piazza of Bloomberg Intelligence. He is Senior Equity Research Analyst. Get a take on what happens if you get those derivative tariffs, if I can call them that, on Venezuelan oil exports. Kim Forrest, Boca Partners, will be joining us for her take on the markets. And Michael McKee, Bloomberg International Economics and Policy Correspondent, who spoke yesterday with Raphael Bostic of the Atlanta Fed, will be joining us as well. And then Steve Mann from Bloomberg Intelligence to break down those terrible Tesla numbers over in Europe, what it all means. But let's kick it all off right now with a Bloomberg Business Flash. For that, we go to Charlie Pellet.
Hi, thank you very much. And here's what's going on. Do want to repeat that key headline crossing right now on the Bloomberg Professional Service. The United States says Russia has agreed to a ban on striking Ukraine energy assets. The headline right now, developing story. We'll keep you up to date as we get more on this developing story. Right now, U.S. stocks, they are gaining. The Dow, the S&P, NASDAQ, all higher. Stocks are rising as traders look past weaker than estimated economic data, with the market extending a rebound from one of the fastest ever equity sell-offs. Here's where we stand. S&P right now up 15, up by about 0.3%. The Dow up 75, up 0.2%. NASDAQ up 78, up by 0.4%. Our Normal is going to have a whole lot more on the markets coming up in just a moment. 10-year 4.31% with a 2-year 4.01%. Gold up $16 the ounce to $3,027, up by about 0.6%. And West Texas Intermediate Crude 69.15, up by about 0.1%. And Bitcoin right now up by roughly 0.3%, 88,140 on Bitcoin. American consumer confidence, as measured by the Conference Board, fell in March to the lowest in 4 years due to concerns about higher prices and the economic outlook amid the Trump administration's escalating tariffs. Stephanie Guichard is senior economist at the Conference Board. She was a guest right here on Bloomberg Intelligence.
What has been driving the decline is especially the expectation component of our index, where we see consumers negative about the future of the labor market, future labor conditions, and importantly, getting more and more worried about future income.
Stephanie Guichard of the Conference Board. One other economic note, sales of new homes bounced back slightly last month from a rocky start to 2025 as home builders benefited from better weather while leaning on generous sales incentives to stoke demand. Among some of the home building names, KB Home after earnings down 4.3%, Toll Brothers up 1.2%, home builder Lennar up by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube. Just head over to youtube.com and search Bloomberg Podcast Live, and that's where you will find us. As Charlie's saying, we just got some gains in the marketplace. But let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Nora Melinda, Bloomberg's equities reporter. Nora, what do you got?
Well, lots to keep an eye on this morning. As Charlie just pointed out, it is important to watch KB Home. So this is a home building stock, and we're seeing the entire sector moving off of this news, but essentially the company reported disappointing first quarter results, and it cut its fiscal 2025 revenue guidance. And this is all due to demand at the start of the key spring selling season for the group that was more muted than historical levels. And spring selling season is super important. That's when they start to see the majority of their revenue come through. So this is not good news for KB Home, and especially not good news for the broader sector. But the story remains the same. We've got rates that are too high and people dealing with affordability issues, and that's why we're not seeing the types of sales that we were seeing before.
Yeah, and they had to spend a lot of money, right, to
exactly
kind of help, like, in order to get the volumes going.
Right.
Talk us through that, the incentives.
Yeah, so incentives are something that a lot of these builders implement, and it's essentially they'll buy down your mortgage rate. So right now, as I last checked, we have mortgage rates that are at 6.7% right now. What builders will do, they'll come in and they'll actually buy down rates to maybe 5% to make it a little bit more affordable for first-time buyers and people that are interested in purchasing new homes. But of course, as you expect, that's weighing on margins, and that's what investors are really looking for to see whether or not builders are able to strike the balance.
All right, what about Tesla here? So the Tesla sales in Europe were not great. Walk us through the why, though, behind that.
Yes, I mean, super interesting here. Of course, Tesla has been a stock that's been in focus, and it's really been struggling over the past few months, as we know. As we look at shares of Tesla, they're down 31% so far this year. But sales in Tesla sales fell for the 10th time in the last 12 months in Europe. It's counting on its redesigned Model Y to boost sales for the company, but those were impacted by production pauses at factories around the world early this year. So people are really just trying to see whether or not Elon Musk and his company can strike a turnaround story here.
I mean, there's rising competition, particularly from the Chinese operators, too. That seems to me the fundamental problem. You know, I'm sure there's people not buying Teslas because they don't like his political issues, but to me, it might be more just competition out there.
It's production. They had to change production over to a new model, and that was what really hurt it. Remember, this is February.
Yep.
People started not liking Musk in March. So, like, I don't think we've really seen the ripple effect from that.
This is true.
So that is yet to come. And Cassava, I don't know what this company is.
Yes, had to look it up myself. This is a biotech company. When we get into biotech, you know, it gets a little hazy there. I'm not as familiar with the names. But Cassava Sciences is ticker SAVA. We're looking at this company because we have shares that are tumbling. It's actually the largest one-day drop on record, tumbling as much as 84%. The biotech company is saying that its Alzheimer treatment, Simufilm, let me not even butcher the name that I can't pronounce, but it did not show a significant reduction in cognitive or functional decline versus placebo in patients with mild to moderate levels of the disease. So not great news as we look at the study here for Alzheimer and the fact that the company is discontinuing its Alzheimer program.
Yeah, that's a binary play there in biotech. Up big or down big.
Exactly. All right, for more conversations like this, go ahead and listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere that you get your podcasts. Nora, thanks very much. Really appreciate it. Bloomberg Equities reporter Nora Melinda joining us there. You know what we should talk about because it's cool?
Energy.
Yeah, we should. Okay, taking a look at oil, getting a bit of a bid today, but really it was yesterday that saw a bid after we heard from the White House that there will be a 25% fee on any nation purchasing Venezuelan oil. So there could be these tariffs directly or indirectly impacted. Oil got a little bit of a bid off of that. Vince Piazza is Bloomberg Intelligence Senior Equity Research Analyst for oil and gas. Vince, walk us through the dynamic of if that tariff was implemented, what that would do to global flows.
Well, first and foremost, I don't think anyone's ever called me cool for covering energy, but thank you. We're talking about 980,000 barrels during a time where demand seems to be on the downtrend, right? I'm not sure how much of this really has to do with the Maduro regime, or if it's a play on getting movement on needs around immigration. But there's also a loophole here that we're trying to close. And I guess the loophole here is it's not just imports directly from the nation, but also working around those sanctions and importing indirectly from those third parties. So I think that's where the impact is intended. And one of those parties that tends to import significant volumes is indeed China. But what's really concerning to me is that, yeah, you know, you're talking about a more relative, nuanced, muted period for demand, but we're coming close to driving season. And that's where refinery utilization tends to ratchet higher to bring about these summer blends for gasoline. And there's going to be more demand for the stuff. You know, Cushing stocks are roughly 35% below the 5-year average. And so if you're trying to reduce inflationary pressure at the pump, when you have low inventories at key hubs and you're restricting the importation of barrels to make the thing that you need, well, it could be a scenario where you're supporting inflationary pressure during a key seasonal driving time in the U.S.
So, Vince, I see the oil tankers go in and out of Venezuela every January when I'm sitting on the beach in Aruba, so I know what's going on down there. But can you help our audience and give us a sense of how Venezuela is as a global producer? How many barrels do they do a day? Are they critical to the global supply of crude?
Oh, sure. Look, every barrel counts when seasonality is a tailwind. So they're roughly 980,000 barrels a day. Put that in context, the U.S. produces 13.5 million barrels a day.
Thank you. Nice perspective.
But in general, you know, those are barrels, heavier barrels that really help the U.S. in terms of its refining slate. So they do provide a ballast for those refineries in the U.S. that are able to work with heavier barrels. We produce lighter barrels. Those barrels tend to be exported, and we tend to import on the heavier side in order to maximize the refining slate we have in the U.S.
So the headline that we also got here were talks between Russia and the U.S. and Saudi Arabia that Russia won't be attacking any energy infrastructure in Ukraine. If we kind of wind our way towards a real ceasefire, are you guys modeling a real return to Russian gas in European markets? Because I'm curious as to how the trickled out effect happens.
Yeah, so there was a significant ballast for U.S. Natural gas flows into Europe during the early days of the conflict. It's interesting now that Europe natural gas storage is running roughly around 30% today versus 30% filled versus last year somewhere around 55%. So there's going to be a real need to bring about more molecules into storage to anticipate the next winter season. And, you know, I tend to think that the European countries are going to look for additional suppliers and not just rely on Russian supplies going forward, even if things tend to normalize. And I don't think, you know, maybe normalize is not the right word, but I think what you could see is more flows, more molecules from the U.S. moving across the Atlantic to help fill those coffers and reduce the impact or reduce the need for Russian natural gas in general.
So, Vince, I watched the first season of Landman. I know all about the oil and gas industry now.
Is there going to be a season 2, by the way?
I think there is.
Okay,
I think I'm watching.
Because that's going to be your next evolution.
Yes, I'm in touch with the creators here, so my people are talking to their people. Vince, what's the overall energy call when you talk to your clients today? I mean, you cover the big integrated, the Chevrons, the Exxon Mobils of the world. What are your clients, how are they viewing the energy space these days?
Well, let me give you another point of reference. Energy in the S&P is 3.5%, less than 3.5% of the index, okay? And it's been that way for several years now. So I think there are structural issues that we have to deal with. We have to deal with the backlash from civic organizations who just don't want to touch the stuff. You have pension funds and public endowments who don't want to touch the stuff as well. So what we have here is a period of retrenchment, more consolidation, getting larger in order to fight for really survival going forward. But in terms of gas versus oil, if you were to tell me which has a longer life cycle, I would definitely tell you natural gas is a not just a transitional fuel, but I think it's a fuel that will stand right there with solar and wind as a complementary source of power generation.
Do you feel, though, that the profitability is still really centered around oil right now?
There is, and that's because of what we're seeing in Texas and how large the Permian is. But I will tell you that if we look to here in the beautiful state of Pennsylvania, we have a lot of natural gas here. We have a lot of liquids in Ohio. We have it here in West Virginia as well. It's in Louisiana, in the Haynesville. We can be a dominant source, not only domestic natural gas, but also global LNG as well. We are a major player in export LNG, and I think that will continue.
So, Vince, the companies you talk to, do they believe that this Trump administration will be meaningfully more supportive of policies that encourage, I don't know, either making pipelines or drilling holes in the ground, or just kind of supportive of the business?
Yeah, the real issue is support for the infrastructure side. Drill, baby, drill doesn't really resonate in Trump 2.0. In fact, investors want the opposite. They don't want the production growth. What they do want is the return of excess capital. And so that means tempering the capital spend and tempering the production growth. But the infrastructure side, being able to transport molecules from production regions to consuming regions, that's the key to the longer term survival and success of this industry. It took a long time to get MVP sanctioned and built. It needed an act of Congress. You know, it needed Senator Manchin to step in. If we can see improvement in that regard, I think it'll go a long way. But also, the communities themselves have a great deal of say in what gets built within the state and also what gets built out of the state as well. And those permits to grow the LNG side of the house, I think those are very, very useful. But again, it's really about building these things on time, on budget, which hasn't been the case.
All right, Vince, we really appreciate it. Thank you so very much. Vincent Piazza, Bloomberg Intelligence. He covers all the oil and gas equities there, senior equity research analyst joining us. Incidentally, if you check out YouTube, I had a piece on Wall Street Week, about 13.5-minute piece on drill, baby, drill, and why it actually may be gas, baby, gas, or build, baby, build, rather than just about oil. And how that sort of idea of not in my backyard is really going to hamstrung and any
natural
kind
gas
of
is it's a clean energy, right? Source.
Cleaner,
okay.
Yeah, so I don't know, a few years ago it was the bridge to green, and then it became its own thing, and now it's somewhere in between, but it is definitely cleaner. But considering we're talking about coal again, I mean, you know, sure, why not?
Yeah.
Also, it's a huge financial opportunity in terms of the export. You just got to get it there, and that means you got to put pipe in the ground.
That's right.
No one likes that. That's the problem. Okay, coming up, we're going to talk to Kim Forrest, founder and CIO of Boca Capital Partners. What is she doing in this market? Do you sell the rallies? Do you buy the dip? Do you hang out? Do you go on vacation? We're going to kind of get her take there on the markets. And Michael McKee, Bloomberg International Economics and Policy Correspondent, will help understand the data that we got today from the Consumer Conference Board and also what he's looking forward to for the rest of the week. Happy Tuesday. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. This offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. We begin with a developing story out of Washington. The U.S. says Russia and Ukraine have agreed to a truce in the Black Sea to work out mechanisms for implementing the ban on strikes against energy infrastructure. S&P right now up 13, up 0.2%. Dow Industrials up 78, up 0.2. NASDAQ up 72, a gain of 0.4%. The NASDAQ 100 index up 0.5%, while the Russell 2000 index of small cap shares lower now by just about 0.3%. We've got the 10-year yielding 4.31%, the 2-year at 4.01%. Spot gold up $10 the ounce, 3,021, a gain there of 0.3%. West Texas Intermediate crude now lower by 0.1%, 69 even a barrel. Coming up, we'll have more on the markets with Kim Forrest of Bouquet Capital Partners. Tesla sales fell for the 10th time in the last 12 months in Europe, where Elon Musk's politicking and a changeover of the carmaker's most important product have been major hindrances. Today, we are looking at Tesla shares. They are lower, little change today. Tesla down by about 0.2%. Meanwhile, recapping equity markets higher, S&P making it 3 in a row right now, up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast Live. And as Charlie's reporting, we got the equity markets holding on to some of those gains from yesterday. Does that suggest that this correction we had earlier, where we came down about 10% on the S&P, was that it, or do we have more to go? Let's check on somebody who gets paid to answer those kinds of questions. Kim Forrest, founder and chief investment officer at Bouquet Capital Partners, joins us. Hey, Kim, how do you kind of take into some of the performance we've seen in the broader equity markets this year? A healthy 10% pullback or potentially something more?
Well, as somebody who is, paid to forecast the future, the reality is nobody knows. However, you can look at what has happened in the recent past, ask yourself, what is actually driving it, and is that going to continue? So I think probably the biggest structural issue that we have with all of the indexes right now is the heavy weighting of NVIDIA. Yes, NVIDIA drove us wildly up last year, and it's not helping things this year. And I think that probably is the biggest thing that is being comprehended by investors, that NVIDIA came down dramatically at the beginning of this year for perhaps good reasons, right? I mean, the whole NVIDIA trade was based on NVIDIA über alles, right? That we would not need any other kind of computing chip ever. It's hyperbole. It's hyperbole, but you get what I'm saying here.
So have you changed your AI thesis in general? Because since we've had some new competitors come in?
No, actually, it's clarifying it though, because I've always been an AI enthusiast, having graduated into this field from, an AI developer of, software developer. But the way I was seeing it play out, it didn't make any sense to me that large language models were thought of as a thinking machine. And what they really are is an instrument to do natural language processing. And now we're in the realm of computer science. The phrase natural language processing had always been a goal for as long as I was in computer science. And it's very difficult to be able to parse out sentences that a computer can then turn into activities. And we're there, but that isn't the thinking machines that investors thought they were getting. That, you could say, hey, design a better car for me and come back in 3 months and the computer would have a better car designed, right? again, hyperbole, but you get where I'm going with this. I think this is the beginning of building blocks of making computing easier and more prevalent than it is even now.
So, Kim, I'm broadening out a little bit from the AI conversation. How does someone like you that does have an expertise in chips, does have a pretty clear view on the market, how do you look at all the headlines and the volatility? Like, what's the headline you're waiting for that changes how you invest, that changes allocation? What is that?
It is my gold standard of investing, is if I can understand a problem, that then I can compute about how much of a problem it is and what the financial ramifications of it are. And if the AI can solve that at a cheaper price point than what the problem presents, that's when I get super excited. And we're kind of getting there, but I don't really see any what I would consider easy to identify problem that large language models are solving. And that is what keeps me from being really happy most days.
All right, so stepping back and looking at this market here, Kim, how are you approaching it for the remainder of this year? We've had this level of what I think most people are just characterizing as uncertainty coming out of Washington, D.C. Has that changed, if at all, kind of how you approach the markets?
No, I have a longer term kind of view on things. And yes, things are rapidly changing, but most of the stuff that I'm invested in isn't really hanging on any particular piece of legislation or, a market opening up or a market closing for that matter. We have really longer term themes like AI playing out over time. And, always the first flush is kind of, the first flush, right? But so taking that longer time view, what we do is we're looking for companies that have a proven process of creating new products for their existing and new client bases and growing that. And that really doesn't change, on the whim of tariffs or, legislation or any of that kind of stuff necessarily directly affects it. It affects the kind of global way that the humans are going to progress, sure. But overall, most of the companies we look at are solving particular problems at a good price, and thus they should be in demand in the future.
I feel like that was a very philosophical way of ending this conversation. Kim, thanks a lot. Kim Forrest, Bocal Capital Partners, joining us. All right, yesterday in an interview with Bloomberg's Michael McKee, Atlanta Fed President Raphael Bostic said he now sees just one interest rate cut as likely this year as tariffs slow down the pace of disinflation. Bostic also spoke about the impact of tariffs on the consumer and his thoughts on an appropriate path for policy for the Fed.
We don't really know where the economy is going to go. Business leaders don't know, families don't know, and local policymakers don't know either. I was at 2, I moved to 1. Historically, when tariffs have played out, there's been a one-time jump in prices. For me, I think there is a question about whether that's going to happen this time. We've just gone through a period of elevated inflation, so it is very much on the consumer's mind.
That was Raphael Bostic, and joining us in studio is now international correspondent, policy and economic correspondent. I don't know. Sometimes your title, it's just too hard.
Okay, just
I need some more coffee. He knows the stuff.
Like they say.
All right, Mike.
Just don't call me late for dinner.
Or Shirley. So what was your biggest takeaway from Bostic? Because what was interesting today with the conference data, soft data we know is coming in light. But then the home sales data is not great either. And I'm wondering if we're starting to see that transition to some of the hard data, and if you got a read on any of that from Raphael Bostic.
It's a little early for it to translate to the hard data. I don't think we're quite seeing it yet. And of course, the home sales numbers are distorted by weather and also by the situations that we find ourselves in with housing, of people with locked-in mortgages and high mortgage rates these days. But Raphael Bostic was saying a couple of interesting things. One, of course, was that he only thinks we'll have one cut this year because inflation is still relatively strong. But the two things he said about the people in his district is companies are telling him, A, they're going to pass along all of the tariff increases to consumers, which you see reflected in perhaps the consumer confidence
numbers today, the big drop in expectations going forward. But at the same time, he also said companies, while they're sitting on their hands now waiting for more details, still think that their revenues are going to hold up and that sales will hold up, that Americans will spend through the higher costs. So that's kind of interesting.
You were down speaking with, obviously, the Atlanta Fed President Raphael Bostic, and I'm looking at the Atlanta, kind of the real inflation. I mean, the real GDP number coming out of Atlanta that we like to quote from time to time. It's a negative number here.
It is at the moment roughly negative. The issue, Paul, is that this quarter has in the data so far big shipments of gold into the United States, which a lot of people attribute to wanting to get it in here before tariffs start and things like that. But gold is not consumed, and so it is not considered part of GDP. So it shows up as imports and subtracts from the GDP now numbers, but it'll be taken out by the Bureau of Economic Analysis when it comes time to do the GDP. So the Atlanta Fed has done some modeling to come up with a more accurate number that is ex gold. But while the Fed was in blackout period, they did not publish that, but they're going to publish on the 27th the latest GDP now ex gold. So we'll see.
Totally did not know that they did that. That is so cool.
We'll see what it turns out to be. But before the blackout, they were estimating when it was negative 2.4%, they were estimating it was actually positive 0.4%. So flat, basically.
What's been your take so far with the soft data at the consumer conference this week or today?
I think people are watching the headlines. And for the most part, the idea that consumers pay tariffs has broken through to Americans, and they expect that their prices are going to go up. And of course, that's the thing that upsets them the most is inflation. So they're worried about what's going to happen. Now, we haven't seen them act on it yet, and they may be waiting to see the prices actually change at the supermarket or wherever. But it is something that gives you pause, and you have to watch, and you see a lot of Wall Street firms upping the odds of recession. Deutsche Bank out with a survey yesterday suggesting 40% chance of a recession. So it's something the Fed has to be very aware of. And of course, as Raphael Bostic said, that would change his mind about what he thinks the trajectory of monetary policy is.
All right, Mike, thanks so much. Appreciate it. As always, Michael McKee, International Economics and Policy Correspondent for Bloomberg News. He talking with yesterday Atlanta Fed President Raphael Bostic. Markets holding on to the gains here. S&P's up about 10 points, the Dow's up 55 points, and the Nasdaq's up 62 points. It's about 0.3%. The 10-year Treasury, 4.31%. We'll keep an eye on that. WTI crude oil just under $69 per barrel. Bitcoin, it's lower. Gold, it's higher, $3,023 per ounce of gold. Continues to rise. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding on to gains. We are, however, well off session highs right now with the S&P up 10 points, 57.78, but potentially could make it 3 winning days in a row on the S&P, up right now by 0.2%, higher by 10. The Dow up 56, up 0.1%. NASDAQ Composite Index up 61. That is a gain of 0.3%. The Russell 2000 Index of small cap shares trading lower by 0.3%. 10-year 4.30%, the 2-year 4.00%. Spot gold up 0.4%, $3,021 the ounce on the precious metal, while West Texas Intermediate crude oil down 0.2%, $68.96 a barrel, and Bitcoin flat on the day at 87,893. There was another dismal report on consumer confidence in the U.S. economy. We got that this morning with the story. Here's Bloomberg's Vinny Del Giudice.
The Conference Board reports the U.S. Consumer Confidence Index dropped to a 4-year low in March. The trouble? Inflation and tariffs. The outlook for the next 6 months is the worst in 12 years, based on the confidence data. That coincides with some Wall Street forecasts warning of stagflation. For those who missed the 1970s, stagflation means sluggish growth and elevated prices. Vinny Del Giudice, Bloomberg Radio.
Shares of DJT up now by 9.2%. Trump Media and Technology Group higher on plans to work with Crypto.com on a lineup of so-called Made in America investments. The products will be available this year in the U.S., Europe, and Asia, pending regulatory approval. Again, DJT up now by 9.2%. Recapping, S&P holding on to a gain of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. Tesla making headlines today. Sales in Europe falling in 10 of the last 12 months, with a 40% drop in February compared to the same month last year. Steve Mann is Bloomberg Intelligence Global Audios and Industrials Research Analyst and joins us now. 40% sounds really bad. Can you put it in context for us and what drove it?
Yeah, I think the drop is anticipated. First quarter is going to be bad because, look, they've been shutting down plants all over the world for the Model Y changeover. We think second quarter will be the inflection point for global sales for the company. You know, Model Y is the best-selling vehicle in any type of vehicle, passenger vehicle in the world. You know, the new model seems to be resonating with Chinese consumers where it first launched.
But Tesla sales have been declining in Europe 10 of the last 12 months. What's going on there?
Yeah, that's a good question. Look, I'm not brushing off the politics that Elon and the pushback that people have on his politics. But I really think that business fundamental has bottomed. Mm-hmm. But in Europe, they are facing a lot of risk. It's not just the politics that Elon is in. Like Germany actually cut off subsidies for EVs, and Chinese are really making headway into the European market, even with tariffs on Chinese EVs. I mean, it's still great value for money for a lot of the consumers over there. So Tesla is facing the Chinese onslaught, but they're also facing a lot of competition from the local folks like Volkswagen, which is launching cheaper EVs. So Europe, we'll have to see.
There's so much to digest. So first off, in terms of the negativity surrounding Musk and his relationship in running Doge, that wouldn't have been reflected yet in February numbers, right? That's going to be a March, April, May thing, correct?
Yeah, that's right. Like if you look at Europe sales, I don't think Elon's politics have as much to do with it on sales, because for all of 2024, Tesla sales were down. It's more to do with less incentives over there in the Chinese competition, and then you see January and February sales down even more. That's more related to the Model Y. So
okay, so that's one part of it, and then the other part is the actual underlying demand. Can Teslas financially compete with BYD and internal European companies when it comes to EVs?
Yeah, I don't think they can compete with BYD head to head in terms of pricing. I don't think going low is the right strategy. I really think what Tesla has done was introduce the FSD, the full self-driving option for the Chinese market, first time ever, and it's been resonating with the Chinese consumer. They love it. They were just amazed how well it drives, without much training, really. This goes back to what I was saying before. Tesla's strategy on FSD is scalability. And the way they're actually training the system allows those vehicles to be basically plopped anywhere in the world, and it should be able to drive itself. And we're seeing that, technological prowess of Tesla now with the introduction of FSD in China.
So is there a scenario, Steve, where China doesn't take over the world of EVs?
I think at some point they will, because they're becoming the lowest cost producer. They've commoditized auto production. I think the profit pool, the profits that are coming in for automakers, not tomorrow, but maybe it's shifting, maybe in a few years. It's really not about building cars and selling cars. It's really about, the user experience, right? It's the autonomous vehicle options that these vehicles provide. That's where the profits are going to be generated for the auto industry. It's about building cars. Building cars is razor thin. EBITDA margin is no more than 10%. And that's like BMW and Toyota. So if you talk about GM, Volkswagen, it's much lower.
That's a good way of putting it. Also, Steve, one other part is the tariff backlash. So if President Trump puts reciprocal tariffs on European automakers, what happens to Tesla models? I know they have a factory in Germany, but what happens to models and sales there?
Yeah, I think Elon Musk, strategy was to build local. That's always been his strategy, was to build local, build manufacturing footprint in the major markets that they sell in. So I don't want to say they won't face tariffs, because they do buy parts globally. So they definitely will face some tariffs. But I think relative to some of the legacy automakers, it'll be less painful for them. On a relative basis, I think they'll be better off.
Steve, on the way up, the bulls were saying, betting on Tesla is betting on Elon. But with Elon focused on Washington, how big of a day-to-day real problem is his absence for the company and the stock?
Yeah, that's a good question, because I personally, I do have some concerns about that. I wonder how much he's always involved in day-to-day. The reason why the company is where it's at today is because of attention to detail, right? He's the chief engineer for all the businesses that he's in. The fact that he stepped away from it is a concern, but I don't see that as a long-term problem. I think Doge is personal opinion. Doge is, I think he's there to help kind of get things started and build up the process. And I think at some point later in the year, he's going to come back and focus more on Tesla and other of his businesses.
All right, Steve, thanks a lot. We really appreciate it. Steve Mann, Bloomberg Intelligence, Global Autos and Industrials Research Analyst. I was talking to Ross Gerber, who owns stock in Tesla. He's just mad. I think I mentioned this earlier. He's mad. He wants Elon Musk back. He doesn't think he's going to wind up coming back. He thinks he got a taste of DC and is going to like it.
Really?
He's not happy.
Well, yeah, with Dan Ives for Wedbush Securities, he was out with a note just probably a week ago saying, all right, that's enough. The company needs him. The investor base needs to see him back at the company. The time is now. And there's not a bigger bull out there than Dan Ives. And
he's calling it out.
Yeah, so if he's saying it, guys, we all best pay attention. All right, coming up, Davey Alba, Bloomberg technology reporter, will be joining us in the big take story of the day, Google reshaping the AI race. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Jess, we have Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over there and check us out. Here's the story, the big take story of the day, and we love the big take stories because they are really interesting topics. Our reporters and our editing teams, they go deep, I mean deep dives into some of these stories. And here's one of the biggest ones I've read in a long time because it goes to the essential aspect of the internet, which is search, which is Google. We all use it a gajillion times a day. We've all got our strategies for using Google, but Google reshapes search around AI as it races rivals like ChatGPT. People ask me what the a use case for AI can be. Well, how about search, like a really, really good search? Davey Alba joins us, Bloomberg technology reporter. She's one of the co-authors on this big take story. Davey, thanks for joining us. How is Google looking at it, like ChatGPT, which people like Matt Miller, I think they've already migrated over to ChatGPT for search and information. How does Google think about it?
Yeah, Google, you know, it's been a few years at this point since ChatGPT kind of burst out into the scene, and that was in late 2022, I believe. When that moment happened, there was a lot of panic, I would say, within Google, as we've heard from sources. And it was really sort of an existential threat to them because even though ChatGPT wasn't, you know, exactly a search product, people were using it like search. So they were asking it questions and getting the answers delivered to them written by AI. And in a lot of cases, it just delivered the information that people were looking for, which is kind of the essential function of search. And so Google, for the past several years, has just been trying to figure out how to answer, this threat from OpenAI. And their plan, it appears, is to stuff traditional search with generative AI as well.
So when I go on and I search for, like, I don't know, swim class for my kid in Park Slope, now what comes up is that AI generated that pulls from broad search. Is that what that is?
Yeah, that's right. So that's a fairly new product called AI Overviews. So that's where the search results page seeds the top portion to results that are written by AI. And this, Google has come out with a search-centric AI model that pulls from results and sort of summarizes and tries to give you the information right on that first page. So it gives the user the information faster, but there are problems with it. There's the possibility of hallucinating in those responses. And
What's that mean? What does that mean?
Hallucinating meaning the AI model could pull together different sources and then just make something up, generate a falsehood, or just generate something that just isn't there. And the other big problem, and one that we explore in this story, is what does this mean for the open web if people don't need to click through to websites anymore and can just get their answers right on the search page? Then why would the open internet still exist? Why would it be a good business model to advertise on websites? So that's been fascinating to look at.
So again, one could paint the argument that this is a existential threat to the entire Google business model, yet the stock doesn't really reflect that.
Yeah, I think that Google has rolled out a lot of these changes around generative AI slowly and experimentally. And for the most part, what it's doing is trying to show the public that it matches the capabilities of OpenAI and ChatGPT. And for the most part, it actually really does. Google is a company with a lot of deep AI history, even before the generative AI was extremely popular. So there's that. But I think the issue is also that there's this sense of like a slow degradation of search and the open internet that just won't really be reflected in the day-to-day stock market because it's so slow. But I think people are starting to really get that sense.
Who's in charge of the AI strategy at Google?
So Liz Reed is the head of Google Search. She's the person that we profile in this story. She's a relative newcomer to search. She used to be an executive on the Google Maps division. And then when generative AI exploded onto the scene, she moved over slightly into main search. And she was the one behind Search Labs, which hosted a lot of the experimental features that I was talking about. So AI Overviews, for instance, started as an experiment within Search Labs before it rolled out to the public more widely.
David, great story on Google. It's one I've been waiting for a long time, because I just think when you think about AI, you just think about search and to what extent is that a problem for Google? Davey Alba, technology reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. And again, the story, Google reshapes search around AI as it races rivals like ChatGPT. You can read more of this story on the Bloomberg terminal and at bloomberg.com/bigtake. That's where we house all the Big Take stories, which come out every day. It's amazing the content that comes out of the Big Take, folks.
Super cool. That's a really great story. And you're totally right. An existential crisis, really, on like your business model. But how do you price that in if you're an investor?
Well, you sell the stock. You're like, I think I've made all the money I can make here. This is going to be a slow burn against growth rates of that I've been used to, that the multiple reflects. I don't know.
On that note, thank you very much, Paul Sweeney. Google stock thanks you. The wraps it up for me and Paul on Bloomberg Intelligence. Coming up, Balance of Power with Joe Matthews up next. After this global news update. Have a great day, everybody.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump indicates he backs National Security Advisor Mike Waltz, the man who started a group chat with U.S. war plans that included a journalist. Top Trump administration officials were before a Senate panel.
The group chat, hours before the March 15th attack, was bad enough, says Virginia Democratic Senator Mark Warner. But the fact that the Atlantic magazine's editor-in-chief was included is beyond comprehension.
I think this is one more example of the kind of sloppy, careless, incompetent behavior, particularly towards classified information.
CIA Director John Radcliffe disagreed.
The use of signal message end-to-end encryption applications is permissible and was, in this case, used permissibly, at least to my understanding.
Some senators are calling for resignations or firings. Lindy Kenyon, CBS News, the White House.
At the Pentagon, CBS's Charlie D'Agata.
To be honest, there are a lot of closed doors here today, but there's a reason for that. I mean, the Secretary of Defense is traveling, and he's taken pretty much the whole front of house folks with him. But, you know, just walking the halls, the people I've been speaking to, I would describe the mood as sheer bewilderment.
No joint statement's been released following U.S. talks with Russian negotiators on a Ukraine ceasefire proposal. CBS's Ramy Inocencio.
A Russian politician in Parliament, and notably not at the talks, is claiming that it's because of Ukraine's position. That's how he said it, whatever that may be. And this politician claims that a joint statement was actually agreed, that it wasn't adopted, and that he couldn't say more until details are officially made.
The U.S. delegation met with Ukrainian officials today. West Virginia is the first state in the nation to ban most artificial dyes in foods, as we hear from CBS's Nancy Chen.
Starting August 1st, the new law prohibits any products that have the 7 listed artificial food dyes from being served in schools. Starting January 1st, 2028, though, West Virginia's ban will also include 2 more preservatives that will no longer be allowed in food or drugs in the state.
Crews are struggling to make progress in the wildfire fight in several states in the southeast. Pierce Womack, an emergency official in Greenville County, South Carolina, says some of it is dealing with downed trees and debris from Hurricane Helene.
Working through a lot of that Helene debris, which is slowing the process down. As we go into the next day or two, crews are working as much as they can.
A closely watched private report on consumer confidence finds it has fallen for the 4th straight month and has hit a 12-year low. Wall Street right now, the Dow is down 26 points. NASDAQ and S&P are trading higher. This is CBS News. The UK has created a watch list of 24 infectious diseases that could pose the greatest future threat to public health.
Some of the pathogens on the watch list are viruses with global pandemic potential, like COVID. Others are illnesses that have no existing treatments or could cause significant harm. Bird flu is on the list, as well as several mosquito-borne tropical diseases that may migrate northwards as the planet warms.
The aim of this tool is to guide investment into research and development.
Chief Scientific Officer Isabel Oliver Oliver says new vaccines and new diagnostic tests need to be ready for the next pandemic. Vicki Barker, CBS News, London.
Here at home, a preliminary report indicates the 14-year-old son of former Yankees outfielder Brett Gardner died of asphyxiation following possible food poisoning. There will be a formal autopsy. The family was vacationing in Costa Rica. There's word others in the group also got sick. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
A partial ceasefire in Ukraine takes hold. Welcome to the fastest show in politics. With breaking news this hour, Ukrainian President Zelensky says the agreement with Russia is being implemented now after Russia agreed to stop attacking Ukraine's energy infrastructure. This crossing the terminal as we speak. We'll have the latest ahead with Bloomberg Pentagon reporter Tony Capaccio. This as President Trump stands by his man, standing by National Security Advisor Michael Waltz after he included a journalist in a text message group about planning military strikes. Members of the president's intel team being grilled today over this on Capitol Hill. And it's the meeting of the minds a little bit later on today as Republican leaders from the Capitol meet with President Trump's economic team on reconciliation. We're going to get to all of this with our political panel. Rick Davis will be with us alongside Roger Fisk, and it's all after a look at Wall Street. Let's start there right now with the markets, Wall Street, and Charlie Pellet in New York. Charlie?
I thank you very much, Joe Matthew. Those earlier gains for the U.S. stock market, they are fading on this Tuesday. Right now, we do have the Dow Jones Industrial Average trading lower. The Dow now down by 0.1%. S&P 500 index higher by a point. Little change, while NASDAQ up 46. The NASDAQ Composite Index up 0.2%, while the Russell 2000 Index of small cap shares down by 0.5%. Again, keeping it all in context, the S&P just about flat on the day right now, up by 1 point. The 10-year 4.30%, the 2-year 4.00%. Gold right now up $11 the ounce at $3,022, up 0.4%. West Texas Intermediate crude oil down 0.6%. WTI 68.66 a barrel on WTI. The rebound in stocks that followed one of the fastest sell-offs on record is fading right now. A renewed rally in some of the world's largest tech companies, though, driving NASDAQ higher. Again, NASDAQ up by about 0.2%. So with markets looking ahead to April 2nd for clarity on tariffs, where does that leave investors? Abby Yoder is U.S. equity strategist at J.P. Morgan Private Bank.
Right now, I think it's just everyone's kind of operating with a blindfold in terms of the headlines each day. But what I think will be important on that day is, one, obviously the scope and the magnitude, but also the duration. Like if we get any clarity around that, I think that will be very important in terms of markets digesting.
Abby Yoder of J.P. Morgan Private Bank. Shares of Trump Media and Technology Group are pushing higher, up now by 8%. On plans to work with Crypto.com on a lineup of made-in-America investments. Those products to be available this year in the U.S., Europe, and Asia, pending regulatory approval. And as Joe mentioned at the top of the show, Vladimir Zelensky says Ukraine will implement a partial ceasefire now. Zelensky also saying talks in Saudi Arabia have been constructive. Antonio Capaccio will have a whole lot more on that coming up in a moment right here on Balance of Power. S&P now higher by 2 points, just about flat on the day. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Updating the markets as we bring you political coverage from the nation's capital. Our wingman every day here on the fastest show in politics, Charlie Pellet, the voice of Wall Street and the New York subway. We'll get back with Charlie on the markets a bit later this hour. He just put his finger on it again. This went hot on the terminal at 12 noon Eastern time. Volodymyr Zelensky talking with reporters about a potential truce in Ukraine, at least a partial one, we can tell you is taking effect. This is the one we talked about many days ago, in fact. Energy infrastructure taking effect now, as well as a Black Sea ceasefire. Ukraine expects the U.S. to monitor if sides observe the truce, according to Zelensky, and we'll have more on this as we make our way through the day. It was a very interesting conversation we had with Ukraine's ambassador to the U.S. on the late edition of Balance of Power yesterday when much of this remained unclear. We'll also be asking about a minerals deal and whether that is still on the table as they try to put the pieces together here on a truce in Ukraine. They'll be discussing implementation of the energy ceasefire next, according to the Kremlin, and we'll keep you posted on this while things may not actually be signed yet on the dotted line. So as we welcome you here to the Tuesday edition of Balance of Power on Bloomberg Radio, on the satellite radio channel 121, and live on YouTube, we straddle both ends of Pennsylvania Avenue to cover the same story. I haven't even mentioned Signal yet. That's been pretty wild and also occupying both ends of Pennsylvania Avenue. We'll get there after this whole thing went kaplooey last evening, and you've got members of President Trump's intelligence team, Tulsi Gabbard, CIA Director Ratcliffe, Kash Patel, and others testifying up on Capitol Hill. It's the money that we are following here by way of reconciliation, Trump tax cuts, debt limit. We've been talking about it for weeks, and now the rubber hits the road with a very important meeting at the White House involving the principals here, Speaker Mike Johnson, the Senate Majority Leader John Thune, the leaders of the tax writing committees in both chambers, and then, of course, the president's economic advisors. Big stuff, right? Treasury Secretary Scott Bessent, Director of the National Economic Council Kevin Hassett, all in a room to figure out how in the world they're going to thread the needle on this. And we heard from Speaker Johnson ahead of this meeting. Listen.
There's no daylight between House and Senate Republicans. We are one team. I speak with Leader Thune about this constantly and with individual members of the Senate over there. We're all united on the mission. And there's been different ideas about how to complete the mission, but I think it's all coming together now. This week will be pivotal.
Why? Did someone suggest there was daylight between the House and the Senate? Let us acknowledge that there is, as we start our conversation with Mike Dorning with us at the table here. Bloomberg's Deputy Capital Influence Team Leader. That's a cool business card.
Yeah,
the Capital Influence Team. Well, you know, there's going to be some pretty heavy influence coming out of this meeting today.
Indeed,
so
for sure.
Talk to us about the sunlight between the two chambers, because John Thune says you need to let me take the ball and run here.
Yeah, now, there's basically the main thing is the Senate would rather deal with some deliverables right away on the border, on some other high priorities, and take more time to work out the tax deal. And there are differences about spending cuts, and in general, the House is more concerned about offsetting the tax cuts than the Senate is. It all sounds very nice. Say, hey, you know, tax cuts, let's pay for them. But a lot of the ways to pay for them are by cutting Medicaid, food stamps, and I think some people are worried it's a bad look to have tax cuts for, you know, a lot of business corporations and wealthy people and be cutting, you know, Medicaid, veterans benefits, food stamps, stuff like that. So a lot of them would just rather, you know, essentially have some way of obfuscating that and just adding to the deficit. Deal with that later.
Enter Ray Dalio.
Yeah.
I said both ends of Pennsylvania Avenue. While this big White House meeting is occurring, Ray Dalio sat down with Republican lawmakers earlier to talk about his research on debt and deficits. This is not a popular viewpoint in the Republican conference right now as we consider what could be a very significant amount of deficit spending that comes out of this reconciliation bill. Do we know what he told them?
Well, we've had some lawmakers come out, but we haven't heard from him yet. They were still meeting when I came in here. But it's sort of the same thing Ray Dalio has been saying at Davos and on Bloomberg television and around the world, saying, hey, I'm worried we're building up too much debt at the moment. It's going to be ultimately threaten financial stability. So when you're doing these tax cuts, you know, try to cut spending too. Let's not keep increasing the deficit even more. So he's not arguing against the tax cuts. He's just arguing, hey,
how to pay for them.
Let's just keep our focus on cutting spending. But he's, according to the lawmakers that we've heard from so far, he hasn't said, oh, you know, you should be cutting Medicaid or you should be cutting food stamps. Just you should cut spending.
It's interesting when you consider the situation that we're in politically here. Economically, Ray Dalio says, we're at a precarious time in what I call the big cycle, where there's a confluence of major forces playing out in a way that is similar to many times in history. That's going to fall on deaf ears to a lot of folks tasked with implementing the Trump agenda, won't it?
I think it will fall on deaf ears to many, but then there are people among the House and Senate Republicans who already have this view, and they will have someone who has some credibility, Ray Dalio, to sort of make that argument to their fellow lawmakers and to the public. So you have people that, in the House Freedom Caucus, in some really fiscal conservative elements, who are saying, yes, we want these tax cuts. The more tax cuts, the better. We just want you to pay for them. Sure. And that creates these problems for people in moderate swing districts who are like, hey, we don't want to cut Medicaid. We don't want to cut the money that goes into veterans hospitals. We don't want to cut food stamps, but we'd like the tax cuts. Thank you very much.
Yeah, sure. They just finished a week of hearing about this in town hall meetings when they went home, right? So what happens after the Chick-fil-A and Diet Cokes get cleaned up at the White House? Mike Johnson, John Thune come back to the Capitol. Will there be a plan?
My guess is that there will not be a specific plan yet. But as you know, you've watched all this a lot. They kind of like... They feel each other out. Yeah. They start to come closer to a plan. Johnson set this artificial aspiration to try to come up with the deal that's actually passed by Memorial Day. They really have till the end of the year. But you'd rather take tough decisions early on while the president has more political power. Usually when you start a new government with Congress just elected and a new president, they're at the sort of peak of their ability to deliver things. So the people who want sort of the biggest tax cut want to do this as early as possible when the Republicans have the most political power.
John Thune says he wants to have a budget blueprint cleared by April 11th, self-imposed deadline. Do monkeys fly that day, or this is not possible?
Congress is planning to take a vacation then, so they like to have it done before their next vacation for Easter.
Plausible then?
It's plausible because remember the House has already passed a budget plan.
Right.
And the budget plan it's not saying like you're going to cut this and you're going to cut that. It's saying
framework, right?
This is your framework. You're going to cut this amount from this area of the budget and that area of the budget. So there's nothing specific yet that you can really get hit with politically. So it's possible.
Stuff. It's all happening today as we speak. Ray Dalio on one end of Pennsylvania Avenue, the Republican leaders from Capitol Hill on the other. I'm here with Mike Dorning, stuck in the middle on Bloomberg. Thank you, Mike. As always, find more of our coverage on what will be a developing story today on the terminal and online. We'll have a lot more ahead on Ukraine and Russia, a partial ceasefire next on Bloomberg.
6:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. equity market now trading little changed. At one point, the S&P 500 index had been up by 0.3%. Right now, up barely, up by 1 point. The Dow in the red, down 39, down 0.1%. NASDAQ up 46, up 0.3%. But the S&P little changed on the day, up less than 0.1%. A rebound that drove stocks to one of their biggest gains this year. Lost steam on speculation. The market may have run too far, too fast. 10-year at 4.29%. The 2-year 4.00%. Gold up $12 the ounce to $3,023, up 0.4%, and West Texas Intermediate crude 68.69 a barrel, down by 0.6%. Tesla's sales fell for the 10th time in the last 12 months in Europe, where Elon Musk's politicking and a changeover of the car maker's most important product have been major hindrances. Tesla shares, they are trading lower now, down by 0.1%. Recapping, the Dow lower, down 0.1%. S&P little changed, up by 2 points, up under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here is Joe Matthew.
All right, Charlie Pellet and I do this together every day in the 12 noon hour Eastern time. And Charlie would tell you, if you asked him, something always happens at noon. It's pretty remarkable coming on the air at this time every day. And you see this, if you're with us on YouTube, the red head right across the bottom of our screen. Breaker, high noon. Zelensky says Ukraine to implement partial ceasefire now. This is a big development here. We were asking the ambassador, the Ukrainian ambassador to the U.S. just last evening on Balance of Power about the status of the energy infrastructure ceasefire. And she was unable to answer that with any sort of time frame, suggesting that they still needed to talk. As we learn now, President Zelensky sees the partial ceasefire taking effect after the U.S. published statements from talks in Saudi Arabia that we discussed yesterday. They were there the last 2 days. Ukraine will implement it, expects the U.S. to monitor whether the sides will stick to the truce, while other countries may also be involved in the monitoring. Slightly different color coming out of the Kremlin, which may not be a huge surprise, says Ukraine will implement the partial ceasefire and confirms the agreement of safe navigation in the Black Sea. The Kremlin's suggesting, though, that the U.S. will discuss the energy ceasefire implementation, making us wonder if we're actually at the point of putting this into effect. This is not the reason why we called Tony Capaccio to come over from the Pentagon today, because we have a whole other story involving this signal, I won't use the word scandal, that involved multiple members of the president's national security team, including the Secretary of Defense, who shared, of course, as we now well know, these attack plans, battle plans for Yemen, inadvertently with a journalist on this text platform. But we want to start with the breaking news. Bloomberg's great Pentagon reporter, Tony Capaccio, with me here at the table. It's good to see you, Tony.
Thank you.
This is happening as the Secretary of Defense travels. He's not in town right now. He's off to Hawaii. What's the trip about?
Well, it's his first take on Asia. Secretary Austin, his predecessor, went about, I think it was like 13 times to Asia. Mm-hmm. This is his take going into Asia to meet with allies in Japan and the Philippines. He's also going to visit Iwo Jima later in the week and meet, I understand, with a Japanese official. Iwo Jima, this is the 80th anniversary of one of the bloodiest battles of World War II on the U.S. side. So he's going there. He goes under the cloud of this signal scandal, if you want to call it that, because the subtext there is, why should we trust the U.S. if they can't even use a secure interagency chat system or something? If I'm Japanese or Philippines, he's not meeting with Koreans, but I would raise that question with him.
Very much in the air as he lands. It's interesting, the timing on Iwo Jima, just days after Ira Hayes' tribute page was pulled down from the web as part of a DEI scrub. Let's talk about this, though. Tony, you know, we talk about the idea of a partial ceasefire. So essentially Russia won't be blowing up power plants and so forth. The two armies are still in heated battle, though. We must remind ourselves, partial is the key word here.
Partial is the key word. The other thing is the Black Sea agreement. That was pretty significant for the Russian standpoint, because the Ukrainians were kicking the heck out of them. They sunk their largest ship 2 years ago in the Black Sea. this is where Ukraine was making the greatest advances. It was a little tough to document that because it's at sea and you don't have TV cameras there. But this is one of the areas where they were pounding the hell out of Russia.
So it sounds like this is what the U.S. can offer Russia here. We'll stop the attacks in the Black Sea for Zelensky. We'll stop attacking the power plants. What about the use of intelligence that this Pentagon has turned on and off? Is it involved in a ceasefire deal like this, or it continues?
My impression, it continues to flow, and that's very important for targeting of the precision-guided weapons that Ukraine has. They don't want to waste them. The targeting is important in terms of specific command and control locations that would keep the Russians from moving forward. So far, they've been pounding these command and control networks, and that's kept them away from the networks away from the front lines. They kept them farther back, and that hurts Russia tactical battlefield implementation when your command structure, your communication structure is farther behind the troops. Right. So it's significant that the U.S. is still flowing. Intel flowing, arms still flowing. Military aid, which Putin said we want this to stop, at least for now. They haven't announced. They haven't announced a new package yet. But just the ongoing stuff that's already been paid for. I think most of the ongoing stuff. Deliveries are. There's the Presidential Drawdown Authority equipment that I'm pretty sure it's all there right now. But the USIA contracts, those are more longer term with Lockheed and Raytheon and various companies. Those are incrementally coming over. They're part of long-term support. And will continue. And will continue. Is the idea here. I think we have another breaker. Producer James is just putting this in front of me here. A statement from the administration, Tony Capaccio. The administration's actions made Houthi terrorists pay is the top line. This is a coordinated effort to distract from the successful actions taken by President Trump and his administration to make America's enemies pay and keep Americans safe. The administration's actions to hold the Houthis accountable has been a massive success. Nothing can distract from that unrelenting action to keep Americans safe. This is coming off the Signal. Thank you. That's the deal. Context. I'm assuming this is a bit out of context, but sometimes that happens. I'm not sure what you think of this broadly, but we just saw Tulsi Gabbard, Kash Patel, head of the FBI, the head of the CIA, Ratcliffe, acknowledging on Capitol Hill that they were all there. The battle plans were delivered inadvertently via this Signal text, but as we heard from all of them, no classified information was shared. Are we to assume that battle plans are not classified? This whole notion of battle plans, Goldberg didn't print any of the tactical issues, like chose not to. How many Tomahawks, how many AIM-9s or AMRAAMs or air-to-ground weapons are being dropped. He also concealed the identity of a CIA agent. He did do that. His article was a model of journalism responsibility. The administration now is acknowledging that there was a screw up. I'm surprised they didn't have like secure email, interagency email, or the old-fashioned conference call. How about surprising that? This also tells me Goldberg maybe has a source in the NSC who's already been talking to him on Signal, and inadvertently his number's in there. Now we're getting warmer. And now we're getting warmer. But how is this not a classified document, or has it suddenly been declassified so nobody's in trouble here? Oh, no, this is clear spin. I mean, it was classified information discussed. Goldberg did a great job of laying out what he did not put in there. And then you had the defense secretary slapping the hell out of him as he landed in Hawaii. He repeated a lot of the Trump administration's disdain for Goldberg. He sure did. Yeah, and he said, I never texted. Are we using that word carefully here as opposed to being on Signal? Well, using Signal as a form of texting with fingers, Yeah. But again, with the classified information, of course, and then discrediting the journalist. Yeah. So the conversation today in front of the Senate Intelligence Committee was a showstopper. We've got a taste of this here. This is CIA Director Ratcliffe.
Director Ratcliffe, were you on the group chat?
Senator, I was on a Signal messaging group.
So you were the John Ratcliffe on that chat?
I was. Those were procedures that were implemented. My staff implemented those processes, followed those processes, complied with those processes, and finally, just please, so my communications, to be clear, in a Signal message group were entirely permissible and lawful, and did not include classified information.
Well, we will make that determination.
That was, of course, Senator Warner of Virginia, who called for an audit. They agreed to one. Ron Wyden also made clear we're going to have an audit here. So
Audit
we're
by
going to
who,
find
though?
out what really went on, apparently. That's a great question.
GAO or the IG?
Well, the Intel Committee.
The Intel IG,
I'm
yeah.
guessing. Does someone get fired here, or White House waiting for this to blow over?
I think someone within the National Security Council will resign over it.
No kidding. Letters are being written, right? Maybe by all of them. That's the way you do it here. You write the resignation letter. The president says he won't accept it.
You keep it in the drawer. Type
Yeah,
of thing,
exactly, right?
Yeah,
There might
it
be
was
a couple
clearly.
of those around.
Heck said it would surprise me with his mad dog approach on this one, attacking the journalist.
Yeah.
And repeating the rumor of the Russia hoax, the suckers and loser hoax. Suckers and losers. That was when the Atlantic 5 years ago broke the story about Trump dissing dead veterans in France. And we all wondered where that came from.
Yeah, well, the president bristled when he was asked about this yesterday and took a similar line. He said, this is a discredited magazine that I thought was going out of business. You mentioned our allies. Do we have the Hegseth? We got to hear. All right, you've been referring to the Secretary of Defense. They got him on the tarmac on his way over here. This is what Pete Hegseth said about it. Let's watch.
Listen,
President Trump said, no more. We will reestablish deterrence. We will open freedom of navigation, and we will ultimately decimate the Houthis, which is exactly what we're doing as we speak from the beginning, overwhelmingly.
Why were those details shared on Signal, and how did you learn that a journalist was privy to the targets, the types of weapons used?
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that.
But Tony, he did.
War plans, in fairness to them, it wasn't like detailed blow by blow. What ships are going to launch what.
Give me the.
I got to tell you that.
Okay.
I mean, that's what's in the article.
So that would have been the classified.
That would have been the classified. That was not in the article, but that's what I would refer to as war plans.
Yeah.
Time on target of Tomahawks, Air Force and Navy aircraft dropping their ordnance, the times they were going to launch, and what targets they were going to hit. None of that was in the Goldberg article, just to be clear.
No, not in the article.
They might have discussed it,
but
yeah.
he had his hands on it, didn't he? They put this all on Signal. He could have published that.
He could have published
Imagine
it.
the blowback if that had happened.
He did a very responsible job. But yeah, they shared war plans in that respect in terms of the tactical aspects of it.
Sure.
And then there was the interesting part where Vance said, maybe we should delay this because only like 3% of U.S. energy flows through that region versus 40% for Europe.
There's a lot of nice things said about Europe, and then to find out that Steve Witkoff was in Moscow while this is happening really makes you wonder who may or may not have had access to that information. Anybody ever send you anything good on Signal? I won't ask.
None of your business,
Okay,
but yeah, occasionally.
Might answer that way. Tony Capaccio covers the Pentagon for us at Bloomberg. This is the straight scoop. We brought him across the river for you and exactly what's being talked about in the Pentagon briefing room today. It's always great to have some time with you. Thank you, sir. Absolutely. Bloomberg Pentagon reporter Tony Capaccio in Washington. I'm Joe Matthew. We'll set up our panel coming up next with a lot more to talk about on a Breaking News Tuesday. The partial ceasefire taking effect in Ukraine. We'll have much more straight ahead on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Stocks fluctuating. S&P 500 index right now in the red, lower by a point, little change, but giving up earlier gains. Have been up as much as 0.3%, but right now looking at a loss of 1 point, just under 0.1%. The Dow down 58, now down 0.1%. NASDAQ, though, holding on to a gain, higher by 37, up by 0.2%. S&P 500 fluctuating. Market forecasters split on whether the rebound has further to go. The 10-year, 4.29%. The 2-year, 4.00%. Spot gold up $12 the ounce, $3,023, up by about 0.4%. West Texas Intermediate crude 68.77 a barrel, down 0.5%. And Bitcoin now lower by 0.2%, 87,700 on Bitcoin. A pair of reports today on the U.S. property market, and with that story, here's Bloomberg's Vinny Del Giudice.
The government reports new home sales recovered in February as the snow melted and the weather improved in many parts of the U.S. The South led the gain. The supply of new homes on the market is the highest in 18 years. That's going back to when the U.S. economy was on the brink of the Great Recession. Meantime, research firm CoreLogic reports home prices accelerated in January. Vinny Del Giudice, Bloomberg Radio.
Home builders after earnings. KB Home down 4.8%. Toll, the luxury home builder, up 1.1%. Lennar up 0.9%. Just getting a headline on the Bloomberg. Engine Capital said to be building a stake in Lyft. It is pushing for a review. Shares of Lyft, they're up now by 6.5%. Developing story again. That headline right now on the Bloomberg. Recapping, S&P now higher, little changed, up by 0.5 point. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back to go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Many thanks to Charlie Pellet with us every day here on the fastest show in politics, Watching Wall Street. We'll get back to Charlie, top of the hour here, for a sense of what's happening in the Tuesday trade. Thanks for being with us on Balance of Power. What a day already. I'm Joe Matthew in Washington, where we've been following a hearing on Capitol Hill, following the revelations less than 24 hours ago about the conversation, the group chat on Signal. Now, this hearing was supposed to be boring, not something that would even be covered necessarily by someone like me, titled Worldwide Threats, with testimony from the nation's two top intelligence officials. But of course, just about 24 hours ago, this story dropped in The Atlantic. A journalist inadvertently added to a Signal group chat with the entire national security team in the Trump administration, where the Defense Secretary, Pete Hegseth, put forth battle plans against Yemen only hours before they were in fact used. So now this hearing gets a lot different for Tulsi Gabbard, for John Ratcliffe, the head of the CIA. Democrats were waiting, and we had some moments here. Mark Warner, the Democrat from Virginia, of course, chairing the Intel Committee in the Senate, gave us a sense of how he felt.
Just to make clear that yesterday's story in The Atlantic was not this rookie one-off. It's a pattern. This pattern of an amazing cavalier attitude towards classified information is reckless, sloppy, and stunning.
Just a taste as we assemble our political panel. Rick Davis is with us, Republican strategist and partner at Stone Court Capital, alongside Roger Fisk, Democratic strategist, former special advisor to President Barack Obama. Great to see you both here. Rick, we talked about it yesterday on the late edition of Balance of Power. It was a fresh story then. We've had a chance to sleep on it. It's become the talker in Washington. And now this hearing, in which both of these officials said they never shared classified information on that Signal chat. Are you buying what you're hearing?
Look, I mean, that's their line. They're going to stick to it. I think that the editor of The Atlantic, who received the information, he's not in the position to determine what is classified and what's not. But kudos to him for not releasing the information that may be sensitive, which is targeting information, sources, and methods of getting that information that were incorporated into that email chain or that Signal chain. And so, look, I mean, it's in the eye of the beholder at this stage because there's no way to evaluate it. But I would say Senator Warner is probably one of the least partisan, most sober members of Congress. That's why when the Democrats were in the majority, he was chairman of the Intelligence Committee. And when he gets his back up, when he starts talking like he has today, that's going to have a real impact on the intelligence community and their relationship with Congress. And so this idea of just deny, 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 I don't think lasts the test of time. And sooner or later, Jeffrey Goldberg is going to probably release that information, and it'll be up to the public to decide whether or not we should be seeing that kind of information.
Well, that ought to be a day in Washington. As Rick reminds us, Mark Warner, now the ranking member on the Intel Committee. Roger Fisk, one of the most wild lines that I've come across in any of the coverage here is that Steve Witkoff, the president's Mideast envoy, was in Moscow while this chat was happening, presumably on a personal phone, because Signal's not allowed, I understand, on administration government-provided phones, making you wonder what the Russians might have been able to sniff from that device. Who's getting fired here?
First off, thanks, Joe, for having me. And I'm sure I speak for Rick when I lament the fact that you always have us on during slow news weeks. There's absolutely nothing driving today's conversation. But this is actually no laughing matter. And and to build on Rick's point, this is, and Senator Warner's, this is a pattern. You can remember back to President Trump in his first term insisting on continuing to use his Android personal phone. So any intelligence service in the world that is at all worth its salt looks at that and sees it as just an individual and a culture and a team that is not exercising a fidelity to the security of the country. What you see in the tonality of those discussions that are now out there for everyone to see is the same kind of performative, caffeinated chest thumping that we see in virtually all other parts of at least the national security elements of the administration. And I had top secret clearance. I'm assuming Rick had some level as well based on Senator McCain's assignments or anything else. At some point, you would say on a chat like that, either A, I would have expected possibly the DNI to say, this is not appropriate, let's all get on a video conference, which all of them have turnkey access to, or B, just absolutely remove themselves from the chat, because I've had people that do that as well, saying, this is not appropriate and I'm removing myself, meaning this either gets dealt with and litigated on official government platforms or in a video conference, but we're not doing this on our civilian phones, that any 13 or 14-year-old that has at all any kind of technological prowess could hack from anywhere in the world. It's not serious people.
Wow. Rick, I'm curious about the audit that Senator Warner talked about. This is apparently something the Intelligence Committee is going to review. Will we ever have a complete record of what happened?
Yeah, we'll get some kind of report, I'm sure, cleansed for public consumption, as well it should be. And I would like to make one point. It is interesting with all the technological advancement that we have, that right now, we do not have a secure mobile device. I mean, one of the reasons we're having this conversation is because people were working off their phones on Signal. And one of the reasons they do that is because we've never gotten to the point where we could replicate the kinds of technology that sits on the desktop of these people who are cleared for top secret clearance, but that we don't have that capability on a phone. And so maybe we should ask the Silicon Valley technical experts to come up with something that we could protect our leaders while they have these kinds of mobile phone conversations, because what's happening now is a travesty to a great country like ours.
Elizabeth reminds us, remember the uproar when President Obama wanted his own BlackBerry? I bet Roger Fisk remembers that. I want to talk about something else important that's happening. There are two big hearings today in Washington. Both of them are going to hit home in living rooms. These are issues that hit closely to Americans, obviously concern about protecting our national security secrets, also concern about protecting Social Security. The Washington Post today up with a piece, and I know the timing is not coincidental here. as Donald Trump's pick to run the Social Security Administration is having his confirmation hearing today. Crisis, though, is the headline. The federal agency engulfed in crisis following DOGE cuts that removed thousands of workers. Office managers are answering the phone at this point. The website crashed 4 times in 10 days this month. And Frank Bisignano is scheduled to face lawmakers today. Senate confirmation hearing, watching people's Social Security benefits on the line. Here's a taste.
I have the ability to lead the agency in the manner that this Senate Finance Committee wants me to do that. And I don't know of any thought that I have about cutting 1/3 of the benefits of Americans or even entertaining anything of that sort.
Yet we did hear from the caretaker in charge of the administration, Leland Dudek, the acting commissioner, Roger Fisk, that the phone service sucks and that the DOGE is really in charge. You talk about the third rail when it comes to Social Security. How's this going to play at home?
Yeah, if you think back to the Republican Revolution of 1994 and the Clinton reelection of 96 and a couple of different examples since, it was usually overreach on Medicare, which is kind of like just Social Security adjacent, that really triggered a backlash. And what you're seeing now is, in a sense, kind of the same cavalier kind of disregard for the human impact of this, the same cavalier disregard that I mentioned when we were talking about the previous subject. And then you combine that with offices closing down. So then all of a sudden seniors have to travel 2 and 3 and 4 hours, and then the online components aren't working. This is going to result in a lot of not only inconvenience, but real suffering for a lot of seniors, especially those who are in the last year or two of their lives. When any of us who have had aging parents know that that's when things get particularly tight. This could be done in a sober and programmatic way. I've never been one to say that government programs should be impervious from audit and review and updating and modernization. But we're to go in with the kind of cut first and slash and the chainsaw metaphors and everything else, and then kind of look for the blinking red lights of where that crippled the system is not, I think, maintaining fidelity, again, to the responsibility that these folks have to the elders in our country.
Rick Davis, Donald Trump said on the campaign trail and has since said in the Oval Office that Social Security, Medicare, off limits, lockbox, whatever you want to call it. Is the White House grabbing the third rail here after all?
Yeah, that lockbox has been picked. I think I went to bed last night thinking about this, and all I could see was, Elon Musk with a chainsaw dancing on the third rail of politics. I mean, this is a crisis moment for anybody who's up for re-election this cycle. And I don't mean that just purely politically. I mean, I understand the impact on beneficiaries of the Social Security system. We have to constantly remind people that this is a system that you pay into. This is not some kind of government, largesse program. It's your money that's in their care. And I know the Republican members I've talked to in the last few days are scared to death about this issue. The idea that we have these systemic changes to the closing down 10 offices. We're now down to 4 regional offices for Social Security. You mentioned the phone system. It was bad before, and now it's gotten worse because you have fewer people answering it. And so whatever the end game is for this administration, they better get to it quick, because people do not forget quickly what happens to their money in Social Security. And if it looks like that's being challenged, they will pay at the ballot box in 2026. Wow. And that's what I think got a lot of the Capitol Hill stirred.
Elon Musk with a chainsaw dancing on the third rail. Rick, you could almost finish writing the song right now live on the air. That's poetry. You're listening to 2 seasoned political veterans from Washington. Listen to what they're saying on this one. They've been around the block when it comes to entitlements. Rick Davis and Roger Fisk, thank you so much for a great conversation. That's just the first half here of Balance of Power. They'll be back in hour 2 with much more to talk about today as we bring Kaylee Lyons into the conversation and bring you a conversation with Republican Congressman Marlin Stutzman. In the meeting we talked about earlier today with Ray Dalio, as we all try to find religion on debt and deficits, it's coming up next, right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Russia and Ukraine agree to a ceasefire in the Black Sea. Welcome to the fastest show in politics. As President Zelensky of Ukraine says a partial energy infrastructure ceasefire is also now being implemented following meetings in Saudi Arabia this week. I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Tuesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, these headlines are flying on the terminal here over the course of the past hour. Just last evening when we spoke to Ukraine's ambassador to the U.S., we couldn't get hard answers on these questions, and now we see some progress.
Yeah, although it does seem there is still some discrepancy on how the sides are viewing the timeline here.
Yeah.
Yes, they've agreed to this partial ceasefire, but while Ukraine, as you mentioned, says it's intending to start it immediately, Russia is suggesting that the Black Sea ceasefire won't actually start until they see sanctions relief, specifically on financial institutions related to agricultural exports, also suggesting the U.S. and Russia still have more discussions to have on the implementation of the energy infrastructure ceasefire. So one side is suggesting not a done deal yet, while Zelensky is saying he's going right ahead.
Being implemented.
Yeah.
By the way, still no word on a minerals deal, which was occupying all of our attention just a couple of weeks ago. Certainly that was the purpose of the meeting in the Oval Office that led to so much discord. So we do have a lot of questions about what's happening here. No matter what, in all of these cases, Kaylee, we have to remind ourselves that the Ukrainian army is still at war with the Russian army and lives are still being lost.
Yeah, now in the 4th year of war. We'll have more on that with Mara Rudman, a former U.S. diplomat, later this hour. We're also going to be joined in just a few minutes by Republican Congressman Marlin Stutzman of Indiana, who's on the Budget Committee, actually had a meeting today with his colleagues with Ray Dalio, talking about the debt and deficit, just as big tax negotiators are meeting with administration officials today on tax cuts, which could add to said deficit.
It's another busy day in the Capitol.
It always
Both
is.
ends of Pennsylvania Avenue.
Just like it's always a busy day in financial markets, and Charlie Pellet is always busy tracking those for us. We'll go to him now in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Good day indeed. We got you covered here at Bloomberg with the Dow, the S&P, NASDAQ, all back in the green. Been that kind of a day right now. Stocks have been fluctuating. S&P right to the numbers, up 5 now, up by 0.1%. We did see a rebound that faded. Market forecasters split on whether this rebound has further to go amid risks from trade war, an economic slowdown, sticky inflation, all topics that we cover for you right here on Balance of Power. The Dow up 6 right now, little changed. S&P, as I mentioned, has been fluctuating, but right now up 0.1%. NASDAQ up 66. That is a gain of 0.4%. 10-year 4.29%, with the 2-year currently yielding 4.00%. Spot gold up $11 the ounce, $3,022 on the precious metal, up 0.4%. West Texas Intermediate crude up 0.5%, 68.78 a barrel on WTI, and Bitcoin right now up 0.2, 88,020 on Bitcoin. Trump Media and Technology Group higher on plans to work with Crypto.com.